Well, now that's gotta fucking suck. Alrighty. And let's do that. Let's do this. Let's do this. And here we go. Campaign Poppy. Kurt. Nikita. Andy Nouse. Andy Nouse. Pet PP Orion. Okay. Sean SlaughterX. User 64791410557. Emo. Crypto Kid. Michael. Mr. Frank Break. Arika. Geo Grant. Lindarella. Good evening. Cisco. User 82638374688865. Jirlo. Top Notch. Boost. Junior. Blah, blah, blah. You got your notebook ready. Cool beans. You might need it. Let's get this ball started. Let's get this party started in here. Okay, I got one more camera to go. Set up. Here we go. And we are ready to roll. Let's do this. You ready? Pan. Uh-oh. Alnor. Patrico. Jose. Joe. Donald. Raven. What do I think of XRP relative to the Wyckoff reaccumulation? That's interesting. What is stock do you like for a covered call next week? All right. Any millions yet? Wally, how are you today? Big Daddy Pickled. Cool beans. Let's get started. We're going to start the recording. Here we go. Whoops, no, I don't want a photo. I want a video. Here we go. And here we go. Good evening, ladies and gentlemen. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. Now, I used nothing but pre-qualified dividend stocks. Thank you. That's very nice of you. Pre-qualified dividend stocks that have consistently increased their dividend payments for at least 2 decades. That is 20 years. Tony, how you doing? Frontman, how are you? Hello, hello, hello. All right. Let's just get started and see what we're going with. All right. That being said, first stock we want to look at today is going to be, let's do Macy's. Why not? I like Macy's. I'm calling the police. KM, you do that. You have fun. Not quite sure what you plan to get out of that. Not sure Sting is taking any phone calls nowadays. I don't even know if they're still in business. Are they? Does the police still play? Do they? I don't know. Hey, James, thanks for all the information you share with us. Chasing Jack, you're welcome. Macy's. Let's take a look at Macy's today. Here we go. Macy's. What did Macy's do today? Looks like she pulled back a little bit. Okay, we're looking at the high of the year, the low of the year. Where was it? Where is it? And what is the movement? 5 things I'm looking for. The high, the low, where was it? Where is it? And where is it moving? Okay, up, down, sideways, up, down, up. Okay, $15.40 is the current price. You're actually calling the police. That's funny. Nice shirt. You like it? All right. So currently we're at $15.40. Let's see what those numbers look like. Does it make sense to jump into Macy's? Now, I already own some Macy's, so it doesn't really make... Royal Caribbean. Ooh. Who's that? Who's that? Nebraska Mary wants to take a look at Royal Caribbean. This is my 3rd time listening to you, but I believe I've learned so much from you. Chasing Jack, thank you. All right, Mary. We are going to take a look at Royal Caribbean, RCB, okay? Or is it RBC? It's a cruise line. Yeah, I understand it's a cruise line, but she wants to take a look, so I'll take a look at it. First, we're taking a look at... I got to move that light. It's reflecting on my screen. That better? No, that's not much better at all. Oh, I moved the wrong light. Okay, that works. Candy, how you doing? All right, so we're looking at Macy's at the moment. The high, the low was, there's all kind of nice, neat, fun stuff. Right now, it's at some. There's a cruise ship, really nice. If you've been on one, I recommend it. Yep, I've been on 7. I got on 7 cruises in 1 year. It was cool. $15.40 is the current price. So, what does it look like? So, if I'm going to be buying this tomorrow, $15.45, well, the closest strike price is going to be this, either the $15.50 or the 16. Now, the 31st is only 2 days away. You're not going to find a good premium for 2 days. Most of the time, no. So we're not going to look at that one. We're going to look at next week's. Okay, let's get rid of that and look at next week. What does next week's $15.50 look like? Well, next week's $15.50 looks like 30 cents, but we're losing 15 off the top. So I'm only going to make 15 cents on a $15 stock. That's only 1%. Well, that works for me. I'm pretty much okay making 1% every single week on each position that I do, because that makes sense. I mean, think about it. Ask yourself a question. Does it make sense? Do I like this company? I think you have. So, okay, thank you for that one. So much life experience. I do. I've been around. I've seen a lot. All right, that being said, let's see what a covered call looks like on Macy's. But first, let's check out the chart, because the chart gives me a good idea. Is it a good time to jump in? Because I don't want to jump in at the high of the year. That doesn't make sense. And I don't want to jump in at the bottom. I want to jump in as it's hitting the bottom, turning around and going back up. Because you're going to make most of your money buying low and selling high. Well, Macy's just had the low of the year recently. So if you can buy Macy's at the low of the year, well, that's a great time to buy. Because if you're down, the only way to go up is up. The only way left. All right, so a year ago, Macy's is $18.75. She jumps up to the high of the year at $22.12. Okay, the last 90 days. Now, I always go from 1 year chart to 90-day chart, because I want to see what the last 3 months have done. The last 3 months, it kind of makes sense. High, low, where was it? Where is it? What's the direction? Down, up, down, up, down, up. Okay, so it's going to the upside. But what happened today? Today, well, was a little bit of a pullback. Does that mean they're done going up from here? Well, maybe they're done for the short term. You know, you go from here to here, take a little bit of profit, bring back down again, then go back up again. Because people were here to make money. So if you see a stock jump from the bottom and it jumps up far enough, let's zoom into the 30-day chart to see exactly what kind of a move that was. All right, here we are. 30 days ago, we opened up at 17.27. The high was just a couple of days later at 17.33. Well, didn't take long to go from the high and down to the bottom, right down to here. Well, what number is that? That is 1366. Okay, from there, look, it's 1, 2, 3, 4, 5, 6, 7 days to the upside. And today, right here, okay, we opened up at 1567 and closed at 1540. So we closed down a little bit today. Well, is it time for profit taking? Well, let's take a look at the numbers. The bottom's right here, 1350. She jumps up to 1550. That's only a $2 move. But a $2 move on a $13 stock is about 15%. It's a nice move, 15% within a week and a half. Well, yeah, there's going to be profit taking, but how much profit taking is there going to be? I mean, how far down is she going to drop before she keeps going back up again? Well, that's an interesting question. Well, let's see what a covered call would look like on Macy's. Now, like I said, I do own some Macy's, so I'm a bit partial to the company because it was one of my best performing stocks last year. Now, people will take one look at the chart and say, how the hell do you mean Macy's one of your best performing stocks? Well, I don't trade like most people trade. I don't buy something and wait for it to go up, up, up. No. I'm in on Monday, out on Friday. I have an opportunity to make 52 trades a year on one stock because I follow it closely. I see where it is. I see where it's going. I see what's happening. And if there's an opportunity to make a quick buck, well, hell yeah, I'm going to take it. That's why I'm here. I'm here for consistency of profitability. I'm looking for 1% per week. Simply, safely, predictably, and consistently. Let's go take a look at the numbers. All right, so let's change a few things around. We don't need that. We're going to change this, okay? This right here, we're going to change that to covered call. That's right down here. It's called covered stock. That means you're covered, you're safe. One of the safest trading strategies there is. Here we are right here. I'm going to buy the 1550. I'm going to do just one contract so you can see exactly what one contract looks like and see if it makes sense. Because that's my number one objective. Does it make sense? That's it. Does it make sense? I'm going to save that video and I'm going to shoot another one. All right, next. And save the draft. And let's do another one. There we go. Okay. All right. So I want to change it also from a limit order. See this right here? From a limit order to a market order. Well, the reason why I want to do that is because a market order will fill first thing tomorrow morning, regardless of whatever the stock opens up at. Why do I do that? A lot of people say, well, wait till the market opens, then put in a limit order. Nope, doesn't work that way for me. Now, I buy it that way because I'm buying the option, I'm buying the stock and selling the option at the exact same time. So it's one smooth trade. I'm only get one commission on it, all right? So that being said, change it to a market order, boom, and then I'm sending confirm and send because now I can see what the order looks like and what does it sound like. Are you ready? Here we go. Buy one covered call on Macy's 100s. Those are the weeklies. 7 February 24. Well, that's not this Friday because there's only 2 days left. What kind of time value are you going to get with 2 days left of the week? You've lost 3 days, Monday, Tuesday, Wednesday. Well, that's 60%. Thursday and Friday, that's 100%. 100%. Monday, now you're down to 80. Tuesday, now you're down to 60. Wednesday, now you're down to 40. Now, let's just go take a look at next week's numbers. So, 7 February 25, that's next coming Friday, not this Friday, next Friday. The $15.15 call option against Macy's at the market to open. So that's the order right there. Now, for those you don't know, this screen right here is live on YouTube. There's a little picture of me right down here in the corner where you don't really need to see anything because it doesn't block any of the other information. Now, I have 2 live videos going right now on YouTube. One, me standing in front of the screen, and one, just the screen alone. So yes, you can, I turn my fan on, you can go to your big screen TV, pull it up, and actually watch on your big screen TV. What's he showing? I'm showing investing in dividend stocks for weekly cash flow. I see something on my screen. Let's move this. There we go. Okay, there's a little bit of glare on the screen. Had to move the lights. We're good to go. All righty. So let's keep on going. The next line, 1507. Well, that's the break even. If the stock is at 1507 or higher come next Friday, I'm going to be in a profit. Well, at this moment in time, namaste to India. At this moment in time, 1540 is the current price. Yep, I know Macy's dividend went down. I realize that. What was I saying? What was I saying? Investing about what, sir? Stock market investing with stock options and dividend stocks for a simple, safe, predictable, consistent 1% per week. That's over 50% per year. Sounds interesting. Hang out, ask some questions, and see if it makes sense. Come one, come all, who walk or crawl. All right. The maximum profit on this trade is going to be 43 bucks. That's it, just 43 bucks per contract. What do I think about Ford? Candy, we'll take a look at Ford in a little bit. Okay, it's on the list for us to take a look at. Okay, so the maximum profit is going to be $40 per contract. One contract, 43 bucks. Two contracts, 86. Should I buy NVIDIA? I can't tell you what to buy, but let's just let you know, I wouldn't buy NVIDIA. Take a look at the numbers. What do I mean by the numbers? How consistently do they increase their dividends? Because if the dividend is a portion of the company's profits they give back to the investors, well, if they're consistently profitable, the shares going back to the investors should increase every year. Take a look at the numbers for NVIDIA. And then take a look at the book value. Because if the Supreme Court says you got to divest, you got to sell off everything and pay off everybody, then see how much money you're going to get. Check out the numbers. Seriously, check out the numbers. Indian market crashed from last 3 months, sir. Portfolio going down by the day. Okay, dude, I honestly could not tell you anything at all about the Indian stock market. Not from, I'm here in the U.S. I concentrate on the U.S. stock market. It is the biggest stock market around. It has a lot more perks as far as I know. So it's easier for me to be consistently profitable here rather than trying to figure out what's going on in the other stock markets around the world. All right, so as I was saying, max profit 43 bucks. Cost of trade plus commission, 1,500. So let's do some math, find out exactly what it looks like. Any suggestions? Sit, chill, absorb, see if it makes sense. If it makes sense, then go take the next step. What is the next step? Well, you're on the other side of the other side of the world. So I really don't know, other than you using a VPN, okay, a virtual private network, in order to be able to trade in the U.S. stock market without getting those big taxes and crap and governmental red tape bull BS. Just call it BS. All right, so $43 is my maximum profit on this trade. Now remember, when I say simple, safe, predictable, and consistent. Well, predictable, I know exactly what I'm going to make before I do it. Most people just buy a stock and hope it goes up. Well, I don't do that way. I want to know what I'm going to make. I want to know what I'm going to risk. Okay, I'm retired. I'm 61 years old, just turned 61. Thank you to me. And I don't want to have to go back to work. So that being said, I like consistent increased dividends because it tells me the company's consistently profitable. So that was an example we used last night. I like using that example. I do. All right, so $43 is the maximum profit I'm going to make. Now it's going to cost me $1,507, so I divide my profit by my investment. That will give me my rate of return for the week, 1 week. Remember, we can do this 52 times a year. 52 times. We're in week number 4, week number 5. All right, anyway, we want to divide it by $1,507.66. Okay, so it gives me a 2.8%. Well, 2.8%, it's really not that bad. If you get 2.8% every single week, that's over 125% per year. That's not bad, but the big question, does it make sense? Do I like this company? Do I like this company at this price? Am I willing to hold on to this company for as long as it takes for me to get my premium every single week? And how long is it going to take to hit my target? Well, at this moment in time, if my purchase price is $15.40, that's my purchase price. As long as the stock stays below $15.50, I'll keep on holding on to it, and I'll keep getting this premium every single week. Okay, so I've been doing it for 20 years. You know, I wake up in the morning, I brush my teeth, go to the bathroom, get my breakfast, and I sit in front of my computer 10 or 15 minutes. That's it. And then I go about my day. Lately, it's been an hour, only because I'm teaching you fine people. Okay, I do have a morning trading group. We get together once every day, first thing in the morning, and we make our trades. And we are looking for 1% every single week. All right, so that being said, 2.8%, I can deal with it nicely. Let's get out of that. Let's get out of this. Let's change this back. And let's go back to the very beginning. Here we are, very beginning. Okay, where are we now? Royal Caribbean. Isn't that RBC? RBC. Nope. Royal Caribbean. I forget what the Royal Caribbean ticker symbol was. Shows you how often I do that. All right, Chasing Jack. Josh, Rich Text Robotics. You actually got to give me the ticker symbol, and more than likely, okay, robotics, if the company's not 20 years old and consistently profitable for the last 20 years, it's most likely going to be a no, a waste of our time. Okay, Chasing Jack, this is my third time listening to you, and I believe I have learned so much. Woohoo! All right, Jack. Uh-oh. RCB. Okay, silly me. RCL. Okay, there it is. RCL. All right, silly me. RCL. Royal Caribbean Cruise Line. Nope. Wasn't that quick? Quick, right to it. Look at the jump. Okay? Now, I have never, ever, Mary, never heard somebody to say, hey, look at Royal Caribbean. It's at the high of the year. Let's buy some and wait for it to go higher. Yeah, no. Sorry. This is what I like to do. See, she goes up, comes down. That's where I want to buy. She comes down, turns around, goes back up. Drops, 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 turns around. Yeah, I'm waiting for the drop. Okay, so here we are now, big jump. More than likely, there is going to be some pullback. I'm looking at 2-3 weeks maybe before RCL actually becomes a contender. So let's put it 3 weeks from today. RCL. RCL, there we go. Jason Jack, I don't know if it's just me, but your way of explaining things are so easy to understand and apply. Okay, so Chasing Jack, I appreciate that, but also remember, my first 5 years of trading weren't that good. It wasn't until my 9-year-old daughter said, Daddy, can you teach me how to do what you're doing? So, to teach a 9-year-old how to trade stocks, well, you have a couple of obstacles to overcome. One, well, it's got to be simple. It's got to be safe, predictable. Can you give us your opinion on margin with this strategy? What's the appropriate amount? Ooh, I'm going to give you a little bit of feedback on margin in 1 second. Hold on. Simple, safe, predictable, consistent, and no way for her to lose. That's the 5 criteria I had to come up. Sweet Jones, how you doing? 5 criteria. Okay, great. Along with the 5 criteria, we had to come up with 5 rules. And they're pretty simple. Now, there are a lot of trading strategies out there. There are a lot of trading strategies that make more money than this. They have the potential to make more money than this one. Well, this one is simple. And it's safe, and it's predictable, okay, and it's consistent, because I can do this one every single week, okay? The simplest strategy, buy a stock. That's it. You just buy it. That's simple. But how do you make money? Well, you buy it, and then you sell it for higher than what you paid for it. That's the simplest. But it's not predictable, and it's not consistent, because you can't just keep buying. You have to sell eventually. Okay, so simple, safe, predictable, consistent. Simple, yes, you're buying the stock, you're selling somebody the rights to buy it from you at the exact same price you just paid for it. Okay, so if I'm going to buy Royal Caribbean at 269, I'm going to sell it to someone else for 270, which is the closest strike price, the 270 right there. And the 270 is going for 445. Well, that is way over 2%. Well, it's close to 2%. Now, 2% every week, well, that's over 100% a year. How would you like to double your money every year? Well, at 2% a week, that is doubling your money every year. Now, this is going to take a little bit of changing your way of seeing the world, because you're no longer looking at things the way you used to. Well, let me buy this, give it a couple of years and see how much money I make. Nope. This is week after week after week. You get up, brush your teeth, sit in front of your computer, make your trades, boom, there you go. Not that difficult. All right. So Royal Caribbean Cruise Line, it's way too high for me this year, I mean right now, but in a couple of weeks it might be okay. So next, let's look at the next one. What else do we got? Oh, wait a minute, I didn't finish going over the 5 rules. We got the 5 criteria. Simple, safe, predictable, consistent, and a way for her to live. 5 rules. Number 1, never buy something you don't understand. Okay? If you don't understand it, which means if you want to buy a stock, make sure you know, are they consistently profitable? Do they have options available? If so, what kind of options do they have available? Okay? The profitability, well, you can either look at the annual reports, the quarterly reports, or go straight to the dividends, because the dividends are kind of joined with the profits. So as the profits increase, the dividends increase. If the profits decrease, the dividends decrease. They're tied together, okay? You can't have increasing dividends with decreasing profits. You can't have increasing profits with decreasing dividends. It just doesn't work that way. They go hand in hand. All right. Pressure. How are you? All right. That being said, never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Me personally, I like 2 decades of consistent profitability. Number 4, weekly options only. No weekly options, no thank you. 5, make sure the numbers work. What I mean by the numbers? Well, where's the stock at? Where's it going? Blah, blah, blah. What am I buying it for? What's the closest strike price I'm selling? What premium am I collecting? Is that more than 1%? If it's more than 1%, everything else looks good, then it's a yes. Really not that difficult. All right. Ford. Somebody want to take a look at Ford. Okay, Ford. Here we go. Here's our high. High, a low. Where was it? Where is it? Where's it going? Up, down, sideways, down, and then up again. Okay, that's the 1-year chart. Not bad. Let's take a look at the numbers. Tomorrow, I'll be buying it at 10.23. The closest one's going to be the 10, but I lose 23 cents. So you take the 23 cents off of this. Okay? Now, 23 cents off of 451, that would be 37. Well, that's 3%. Hell yeah, that works for me. The 10.50 is going for 28. Well, that's over 2%. But the 10.50, the stock has to go up. The 10, the stock doesn't have to do anything. So I'm going to write 4 down, circle it, because it looks good. All right, now let's go through the numbers a little bit closer. A year ago, Ford was at 11.47. The high of the year was in the middle of July last year. Big drop. I mean, within what's that, a couple of weeks? 14.86 is the high, and that was the 17th of July. By the time we're into the 5th of August, which is what, 3 weeks later, we're at the bottom of the year. John Test, I never even heard of Test. T-E-S-T. I'll take a look at it. All right, she shoots up. Look at this. up, down. Oh, look at that movement. It's like a channel just going sideways. But then she finally drops out of that in December. So August, September, October, November, and December, all going in the same range. And then at the end of December, she drops down. And now this is where we are now. Okay. The last 30 days. It doesn't look that good once you squish it down to the last 30 days. Because 30 days ago, we're at $9.90. $9.90. Okay, she dropped, find the bottom of the year, right there, 9.51. Shoots up, pulls back, shoots up, pulls back, up, down, up. Okay, so she is kind of in an upward trend. And the numbers look good. But you always got to ask that question, do I like Ford? Now, before we move on, I want to show you something. Not many people see this all the time, but here we go. This, hold on a minute. So, I'm shooting videos at the same time. Offensive things I've ever. There we go. All right, next, we're going to look at the seasonality. Now, the seasonality, well, that gives me an idea. How does a stock normally move based on the season? Well, what do I mean by that? Well, January, February, March, April, May, June, that's the calendar. So, if you think of it that way, winter, spring, summer, fall. They say no because okay, not a problem. Based on the calendar, winter, spring, summer, fall, because different companies function differently in the springtime, and they function differently in the winter, and they function differently in the summer. It's actually that simple. That's what they call seasonality. So you got your 4 quarters. First quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. Well, first quarter, second quarter, third quarter, fourth quarter. Okay, so the first 2 quarters, first half of the year, drops. Then right around May, okay, towards the end of the second quarter, she shoots up. This is right around graduation, because people graduate in May and June. Okay, and then summer. What are you going to get your kid for graduation? I'm going to get him a Ford car. Well, what happens to Ford right around graduation? Stock goes up. Summertime goes sideways, drops back down. What are you going to buy your kid for Christmas? I'm going to buy him a car. Stock price goes up. Just before Christmas, right around Christmas, she goes back down again. Certain stocks move differently based on the season. So what's going to happen now with Ford? Well, look at where we are. We're right here. The blue line represents this year. The red line is 10 years average movement. See, what does it normally do? Okay, so here we are right here, right where the blue dot is. That's today. Click, drag, and what are we looking at? Well, here's where we are. Right here. Okay? Here's where we are now. The end of January is right there. The first week of February, she shoots up nicely. Second week of February, she starts coming down, and then she goes sideways. Now, 1 week. That's it. Based on historical performance. Is this guaranteed? No, this is not guaranteed at all. This is just what did it do last year and the year before and the year before and the year before. So we got 2015, 2016, 2017, 18, 19, 20, so on and so forth, until we have 10-year average movement. All right. That being said, let's take a look and do one on Ford. Whoops, it went too far. Too far. And here we go. All right, so let's do one on Ford. Let's change right here where it says single option. We want to do covered, which is a covered call where I buy the stock and sell the option. Well, currently it's at 10.23. Well, the 10 makes more sense than the 10.50 because that's your choice. The stock's at 10.23. What's the closest strike price? The 10 or the 1050, one or the other. We'll check out the numbers for both. Which one makes more sense? Which one's more profitable? Which one is safer? For me, the 10 is safer because the stock is already over 10. All right, so let's do it. So the numbers aren't going to be 100% accurate, but you'll get an idea of what it looks like. So I'm going to buy it at 10, one contract, and at the market. There we go. And here's Johnny. Buy one covered call of Ford 100s, that's the weeklies. 7 February 25, that's next Friday. 10 call option against the Ford at the market to open. Okay, that's the order. Break even, 969. Well, the stock is currently at 1021, and it looks like it going up. So 31 is going to be my maximum profit. It's going to cost me 969. Let's find out exactly what that looks like. Clear that. Maximum profit right there, 31. Divided by the cost of the trade, including commissions, 969.66. Grand total of 3.19. Now, you're not going to get 3.19 because you're buying it at 1021. You're selling it at 10. So you're losing 21 cents right off the top. So maybe you walk away with 2%. Well, 2% on Ford, think about it. Ford has been around for over 100 years. Okay? Well, I think it's pretty much a worldwide known name. Kind of like Coca-Cola. You can buy a Coca-Cola in Japan. You can buy a Coca-Cola in Indonesia. You can buy a Coca-Cola in Alaska. You can buy Coca-Cola almost anywhere on the planet. Ford, probably the same thing. Probably. Becca Makawa, how are you today? All right, let's keep on keeping on. Got to make best of. All right, I like Ford. I don't think I have any Ford. No, well, no, I don't have any Ford. All right, I'll have to buy some. All right, let's get rid of that. Let's get this back to where we started again. And, oh, wait. Somebody asked me about margin accounts. Okay, so what I always tell people about a margin account is never do a margin account until you realize the risks involved. Because there is a better risk-reward ratio with a margin account, but you're borrowing money from someone else, and you're paying an interest rate on it. And believe me when I tell you this, when, not if, when the stock goes down, if you buy it on option, you lose your money first. Candy, you like Ford too? I'm going to show you the difference between a covered call on Ford using a cash account and then doing the exact same thing using a margin account, because this account right here, this is a margin account. So the numbers are there, and it's going to be a little bit different. Okay, so let's do the 1050 this time. Not as much profit, but give you a better idea. One contract at the market. And here we go. Buy one covered call of Ford 100s. That's the weekly. 7 February 25, that's next Friday. The $10.50 call option against the Ford stock at the market to open. That's the order right up there in the green. Okay. Now, max break even, $9.92. Well, the current stock price is $10.21. I'm safe as long as it's above $9.92. Okay, the maximum profit, $57.50. $57.50. So let's get the calculator out. $57.50. $57.50. We want to divide it by the cost of the trade, including commissions. $993.16. Okay, $993.16. That's 5.78%. Well, that's freaking awesome. But that's a cash account. Okay, if you have cash, this is what you can get. Now, it's not going to be the exact same because in the morning, all the numbers that you look at, I'm going to show it to you in a minute, but all the numbers are going to change consistently. Okay, it's kind of like, see who knows where this came from. I like doing movie quotes because that's how we communicate with each other. We use something we have in common. Well, what do we all have in common? We all went to grade school. Math, English, writing, arithmetic, all that crap. So we can communicate with each other. Also, the movies that we watch. Your past trades that you post are those ones a trading method or other strategy. This is basically this trading method for the most part. Every once in a while, I'll throw in a different trading strategy. But for here, at night, I only teach one strategy and only one. I have to draw the line somewhere. And I've been trading for 20 years. I know a lot of shit. I do. But I only give away one for free. And if you do it right, it should get you 50% or more per year. And if you're okay with 50%, awesome. If you're not, I can't help you out. Anyway, let's keep on going. I stopped that video. We're going to look at the seasonality. Now okay, draft. Come on. Let me tell you what that is. And there we go. Okay, Candy, hold tight. All right, so this is, let's go with this side. This is a cash account return, 5.7. That's nice. Margin, well, let's do the arithmetic again, but using a margin account. All right, clear that. The profit is still going to be the same, right? 57.50. 57.50. But look at the number here. Buying power effect. This is the margin account. 482. So if I'm going to use all cash, 993. Margin. This is a 2-to-1 margin. Okay. 482. So let's see what it looks like at 482. It's the same profit. It's just that margin money, I'm borrowing money from the broker and I'm using their money to invest. 482, 65, grand total of 11.9%. Well, hell yeah. Think about it. 11.9% doing a safe trade like a covered call on Ford. Well, number one, Ford's been around for over 100 years. Number two, a covered call is one of the safest trading strategies there is. If you can do it on margin, you can get a nice rate of return every single week. That's why I like weeklies and I don't like monthlies. Because monthlies, you can only do it once a month. That's 12 times a year. Granted, it's less work, less effort. But if you find something to do every single day and make it a habit, well, that's a lot easier than finding something to do once a month. All right, anyway, let's get rid of all this stuff and we can get back to looking at some other stocks and answering some more questions. All right, there we go. La 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 la. Double J, Qualcomm getting ready to break out. Now, I like Qualcomm, so let's take a look at it. QCOM. QCOM. Interesting. Not quite sure I agree with your assessment. Okay, here's the last 30 days. High, low, where is it? Look at the direction. Up, down, sideways. Yeah, that's at the 30-day high, brother. Terribly sorry. I don't like buying at the high. Okay, I will buy down here. Okay, here's your bottom. 2 days up, pulls back. 2 days up. That's where I'd want to jump in right there as she goes up. 2 days to the upside before I jump in. So I'm doing it for 1050. Now, Candy, you can do it for whatever you want. I do not tell people what to do. Okay? Now, I am going to buy Ford probably for either Monday, because if it continues the way it's going, All my money's tied up in my current positions. You're probably thinking to yourself, well, he has no money. No, I don't. All my money's invested by Monday. Okay, 98% of all my money is invested every single week. I don't like cash sitting in my account. Now, I leave just a couple of $1,000s sitting there in case I need something. I have a credit card and a debit card attached to my trading account. Other than that, there's just about nothing in my checking account or I don't even have a savings account. Don't. Because all my money is working in the stock market. A couple of thousand just sitting there in case I need it. But other than that, 98% of everything is invested in the U.S. economy. I believe in my aunts, my uncles, my cousins, my brothers, my sisters, the guy down the street. They are all working. Shell, Exxon, Walmart, AT&T, IBM, Home Depot, Lowe's. The American economy is run by our neighbors, our brothers, our sisters, our nieces, nephews, cousins, relatives. The kids you went to school with, they graduate, they go work in the American economy. Great. Where's the best place to put your money? In the American economy. Okay? Anyway, let's keep on going. That's Qualcomm. Yeah. I like Qualcomm, but there's the move right there. Okay? We missed it for this week. Okay? So as she comes back down, see, she goes up, down, turns around, and goes back up again. You get a 30-day high, 30-day bottom. Okay? This is going to disappear, and this will become the new 30-day bottom. And then this will disappear, and we'll come up with a new 30-day bottom in a couple of weeks. At this moment in time, no. But I am going to put Qualcomm down for 2 weeks from today. Boom, 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 boom. QCOM. There we go. QCOM. All right. Let's see what else you guys got for me. Low, all right. Sidster, low of what year? How do you determine where the year starts and ends? Sidster, I'm going to let you slide on this one, only because I'm not quite sure how you even word that. Let's look at it this way. You ready, Sidster? What is today's date? Well, today's date is January 29th, 2025. So when I look at a one-year chart, okay, I look at a one-year chart, this right here, the very far right, is January 29th, 2025. A one-year chart all the way over here is January 29th, 2024. So, one-year chart, okay? A year ago, today. A year ago, today, okay? Whenever you're looking at a chart, it always goes from today to whenever you're looking, okay? This is today, right here. 3 weeks ago, right there. A month ago, right there. 6 months ago, right here. A year ago, right there. This is a one-year chart looking from today, the 29th of January, 2025, to the 29th of January, 2024, a year ago. That's the one-year chart. TikTok. Tiki-Talk. Hello, sir. How are you? I am delightful. Okay, how do you determine where the year starts and ends? Okay, we already figured that one out. Tino. Hey, James. Can you adjust the screen on YouTube? Adjust the screen on YouTube? This one here? Hold on a second. All right, there's a little bit of adjustment. What's the other screen is he talking about? Now that's interesting. All right, anyway. I am okay, YouTube. Just going to check my screen because someone's asking about my screen. They seem to be fine. There's me in front of the screen, and there's the screen itself. Okay. All right, back to where we were. Okay, here we go. Next question. The world you want to live in, girl. How are you today? JD, what's happening, JD? One secret to success. Cool, welcome. Laggy, what's happening? Kate's. Seabiscuits, thoughts on Exxon or Phillips 66? That's XOM and PSX, right? XOM, Exxon, and PSX is Phillips 66. Okay, Exxon. XOM. Interesting. Okay, now, Exxon, we're going to wait and find a new bottom. Okay, 30 days ago, we're way down here, the 30-day bottom. Shoots up, here's your 30-day high. The past 2 weeks, she's coming down. Great. When she's done, we'll take a look, and about probably sometime next week will be a good opportunity to jump into ExxonMobil as she turns around and goes back up. So I'm going to write that one down. Yeah, okay. And PSX. Phillips 66. Ooh, what's happening there? Okay. Unfortunately, Tyrone, my boy speaking facts. Yeah, Tyrone. Woo. All right, anyway, take a look. 30 days ago today. Wait a second, what's 30 days? 30 days. Okay, here's our 30 days with Phillips 66. 30-day bottom, 30 days ago. 30-day top, 2 days ago. Now she's coming down. Missed it. Missed it by a whole month. Anyway. Well, actually, you could have jumped in here because she went up, pulled back, 2 days the upside, the up here, and then when it kept on running. Okay. Well, you missed it. Sorry. La, la, la. Sorry about that, Seabiscuit. Relaxing in Donder. Relaxing in Donder. I have no idea. Music City, Nashville. How are you doing today? Janine Amaya. How are you? LA Digit Creations. Okay. Fantasy Slayer. How are you doing? Kim. Can we look at Melly? Uh-oh. Now, King Midas. Melly, never heard of it. And it's never a good thing. M-E-L-I. Oh, hell no. That's $1,800 per share? Okay, you are looking at me, right? What makes you think I can afford $1,800 per share? Most of the stocks I buy are under 200 bucks. 1,800, that's a little bit out of my range. But hey, we'll take a look at it. Why the hell not? A year ago, we're at 1,800. The bottom of the year, mid-April, 1,326. The high of the year, well, end of September, 2,159. Well, the last 90 days, well, here you go. Here's the high, here's the low. Look at that move up. Nice. Great. All right. What does this stock normally do? Last 30 days. Here we go. Definitely not a time to buy. Okay, 30-day bottom, 30-day top. She's getting ready to pull back, in my humble opinion. But what does it normally do based on seasonality over the last 10 years? Well, over the last 10 years, look at it. She jumps up nicely in January and beginning of February. Then she drops, goes sideways, and in July she jumps up again and then goes sideways again. So this is one of those companies, if I was going to do it, I would look at the beginning of January and the beginning of mid-July. That's about it. But I don't do $2,000 stocks because I ain't as rich as you think I am. Anyway. Interesting, Melly. I've never heard of it before. SPLG. CJ Bohannon. Bohannon? SP? SPLG. What the hell is that? SPLG. No. Sorry, simple. Take a look. Monthly optionable stock. I don't do monthly. See? February, March, June, September, December. No, those are all months. That's called a monthly optionable stock, and that's a no. Melissa Laws, how are you today? What do you recommend for steps for a newbie? Well, my recommendation for new people, just keep coming back. Look at all the different people, such as myself, showing you how to trade online. It's really not that difficult. I mean, think about it this way. Whether you like to admit it or not, at some point you are going to retire. And then your money is going to come from somewhere. Because, Tim McCarty, how are you doing? Dude, have we figured that mess out yet? I have no control. Once you join, I have no control over your side. I only have control over my side. Anyway. So as I was saying, once you decide to retire, your money has to come from somewhere. Because we're the only species on the planet that's got to pay to live here. Unless, of course, you want to totally go off grid. It's nuts. Yes, it is. And you're not the only one it's happened to. It's like it's happened like 3 times in a year. So 3 times in 1 year is not that bad. But think of it this way. If you want to go off grid, I mean totally off grid, and live that native life, live off the land, yeah, you could do that. Other than that, we're the only species that got to pay to live here. So at some point in time, you have to figure out where is your money going? Where's your money coming from? Okay, you work as an adult, contribute to society, and eventually you get some kind of retirement fund, okay, 401k, pension fund with your company, maybe you make some investments. Well, the money's got to come from somewhere. Someone has to invest it. I mean, don't get me wrong. I got a friend of mine. He was one of those that created the real estate mess back 20, 30 years ago. He used to buy land, chop it up, and develop it. Okay, great. He made millions. And he got to a certain point where he didn't want to invest. He just wanted to draw off the money. So eventually, the money disappeared. It's all gone. So now, he's poor. It's kind of weird because he used to be a millionaire. Weird. Anyway, let's roll. Doc, what's happening? What's your advice on entries? Dice the Great. What's your advice on entries? My advice on entries, I don't like playing around and I don't like sitting in front of my computer, okay? I jump in the morning and I buy it at the market open, at the market price, okay? The only time I use a limit order is when I'm selling a covered call against a position I already have. That point, I will use a limit order. But when I'm entering a position, I want to buy the stock and sell the option at the exact same time because they're tied together and I already know what I'm going to make. Melissa Laws, you like my thinking? Cool beans, thank you. Happy birthday, thank you, Jonathan. I don't look that bad for 61. I still play soccer. I still get out there and run around with those 20 and 30-year-olds. They don't like going up against me because, you know, when you're at my age, you got nothing to lose. So it's like, come on, bring it on. Yeah, anyway. What's this program? Melissa, the program, I call it Dividend Capturing 2.0. That's where we take dividend stocks and kind of combine them with dividend capturing and covered calls. So you're taking 3 things put together. Dividend capturing, dividend stocks, and covered calls all coming together at one. Call it Dividend Capturing 2.0. Have you ever had a year you beat the S&P? Okay, Mickey, Isla, okay, I have no, okay, just plain old Mickey. Mickey, there has not been a year in the last 15 years that I didn't beat the S&P. Every year I beat the S&P. Would parking money in a 3%, this is an interesting question. Tim, would parking money in a 4.3% bills with most of my money be a good idea while learning this? Well, I suppose you could do that. Okay. It's always better to be safe than sorry, Tim. And I always tell people, if you're going to do this paper trade. Now, I want to show you something. See on the screen? These 3 accounts. I have 7 accounts altogether. Okay? But these 3 right here, 1, 2, 3, real account, paper trading account. Okay, this one is not real. But all the numbers are almost the exact same. Because you can't tell the difference between a real account and a paper trading account when you're going through the exercises. So yeah, I tell people consistently paper trade. Now I've been trading for over 20 years and I still paper trade. And the reason being, because most beginners are going to lose money by hitting the wrong button. So I've done it 3 times last year. Okay, for Ford, here we go. She's got a question, Candy. Okay, for Ford, if you were me and this is your first covered call, would you buy a covered call today and at the strike price for February 7th or wait until Monday? Now that's a simple question. Here's my answer. Today's Wednesday. Tomorrow's Thursday. You have Thursday and Friday. So if you wait until Monday, you lose time value for tomorrow, Friday, Saturday, and Sunday. Even though there's no trading on Saturday and Sunday, the clock is still ticking. So if you were just going to start out, your very first one, do it whenever. Whenever it feels right to you. If you think tomorrow is a good time to jump in, what did I have? Give me gas. Oh, anyway. If you feel it's the right time to do it tomorrow, you'll gain a couple extra pennies per share because you're doing it on a Thursday rather than a Monday, because you get those extra 4 days of time value. Because as the sands flow through the hourglass, so do the days of our lives. Same thing. As the time ticks away, so does the time value on the option premium. I'll have to figure out how that goes. As the days tick away, so does the time value of our option premium. Anyway, as time goes by, you'll start losing money. Mickey says, is this your first year investing? Mickey, you've been here before. I'm going to show you this, Mickey, just for the fun of it. You ready? Right, let's get rid of this. Let's go right to here. And let's go down here. All right, Mickey, you ready for this? This is my website. You see this? This is my rate of returns for these 3 accounts for last year. All the numbers down here. Okay, these are all the trades I actually did last year. Go all the way down to the bottom. All the way down to the bottom. It's a long way down the bottom. That's a lot of trades. Look at this, week number 19. Okay, this is all the trades I did, week number 19. All the way down, keep going, keep going, keep going, keep going. Week 10, week 9, 8, 5, 4, 3, 2, 1. Here we go. All right, right there. Okay, that is the very first entry. Ooh, what the hell did I do? I stepped on the cord and everything went out. Holy shit. All right, well, let's go. There we go. Sorry. I stepped on the electric cord. See the date? Starting date, August 31st, 2011. All right? Starting capital in 2011, 82,000. Profit, 32,000, 39%, 9.75% for the month. Per month, 9.75 per month. Okay? 2012 was up at 114, profited 120. Ooh, that's over 105% for the year. Cool. 8.7% per month on average. Okay, 2013. And then if you go further down, you'll see there's 2013. What are we looking at? Look at this. 1 year, 90 day, 30 day. That sound familiar? 1 year, 90 day, 30 day. Okay? Moving sideways all year. Last 90 days took the channel close to a year's high. Last 30 days still had a channel looking for the dividend to make the push upwards. Basically, I'm doing the exact same thing as I did. What date is this? 2013. Okay, I have a lot of this stuff. since 2011. It wasn't until last year, 2023, was it? 2023 was I able to stand in front of a computer, in front of a TikTok and start doing that. It was simple. Hey, this is James from Dividend Stock Talk. This is what we're doing this week. Blah, 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 blah. Okay, and then you hit send. Simple. No editing, no script, nothing. Just pick up and just do it. So great. Last year, it took me about 5 or 6 months to get enough people, because you have to have 1,000 people, 1,000 followers in order to be able to turn on a camera and stand in front of the camera. So I got that last January. So as of last January, I started doing live shows. So yeah, I've been trading since the 1990s. Okay, when I first started trading, let's get out of here. When I first started trading, the commissions were $250 each. $250 to get in, $250 to get out. $500 just in commissions. So you had to be right. And I believe my first year of trading, I did, you ready for this? 125 trades without a single loss. It was freaking awesome. Yeah, I was high as a kite. I was untouchable until my arrogance and cockiness knocked me down a patch and I got humbled pretty damn quick. Okay, lost everything in a month. Okay, but it wasn't until 2008 when my 9-year-old daughter said, "Daddy, what are you doing? Can you teach me?" That's where I came up with the current strategy that you are seeing. Simple, safe, predictable, consistent, 1% per week. All right, let's keep on going. So, Mickey, hope that answers your question. Sidster, sir, how do you get 1% every week? I don't get it. I joined late. Oh, Nebraska Mary, we already looked at that one. What do you think of MPW? Ooh, Lindarella, I have a whole bunch of MPW. As a matter of fact, I have MPW in like 4 different accounts. That's how much I like it. So to answer your question, Sidster, how do I get 1% every single week? Well, let's take a look at another company. MPW. MPW, and I'll actually do a trade on MPW for you to see how I get 1% every single week. Now, when I say the 5 rules, never buy something you don't understand, never sell at a loss, make sure the company's consistently profitable, and weekly options. The only way you're going to get weekly profits or weekly cash flow is through a company who has weekly options. 31 January, 7 February, 14 February, 21 February, 28 February, 7 March, 21 March, so on and so forth. This is a weekly, every week. February, March, June, September, January, March, June, January. Those are months. Those are monthlies. I have no desire to even look at monthlies because it just doesn't work for me. If you guys like them, more power to you. I don't like them. MPW, back to where we were. Here we are. So, hold tight. I'm going to show you exactly how I get 1% every single week. First and foremost, you have to find a set of companies you like. Now, we checked last week. There's 9,845 different companies that you can invest in any day at all. Okay? 9,845. Now, how do you figure which ones to buy? Young investor, how are you today? How do you find which ones to buy? Well, for me, it's pretty simple. I like consistency of profitability. 2 decades, 20 years, 2 decades. Now, what do I mean by that? Well, you have a choice. You can read the annual report and the quarterly reports for the last 20 years to see if they're consistently profitable. Or you can cheat, take the lazy person's way. I'm a lazy trader, I admit it. I don't want to do the amount of work that some of you guys do because it doesn't make sense to me. That's my number one. Number one takeaway from all this, does it make sense? Okay, so what do I mean by that? A dividend, okay, the name of the show is Dividend Investing for Weekly Cash Flow. The key word is dividend. A dividend is a portion of the profits the company gives back to the investors just for owning the shares, because basically you're giving them the money to invest and to do whatever they do, and they use that money and they create a profit, and when they do, they give some of that profit back to the investors. That's us. Just for owning the shares, we get a portion of the profits. Okay, so out of the 9,845 companies, about half of them no dividends, half of them with dividends. Okay, so you knock off half of the companies right off the top because they don't have any dividends. Now, just because you have dividends, I think there's like 5,500 companies that have dividends. Out of those 5,500 companies, well, I want only those that have consistently increased their dividends for 2 decades. That's 20 years. So if you got your pencil and paper, here you go. You ready? Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and let's throw in Warren Buffett's list for the fun of it. Those 5 lists right there should give you about 300 companies to look at. Well, 300 is a lot. Now, what do you do with those 300? Hold that thought. I don't need to see earnings. Once you get your list of companies, you throw them into a EX dividend calendar. See, this is January 2025. Mondelez, US Bank, American Express, Bristol Myers Squibb, Verizon, MasterCard, Globe Life, AbbVie, Procter & Gamble, Moody's, Bank Mellon, and a whole bunch of others. You take it and you stick them into a calendar because each quarter is the exact same. So, this is the first week of the year. First week of the first quarter, also known as week number 1. There's 52 weeks in a year. This is week number 1. Now, there are 4 quarters. Each quarter, January, February, March, quarter 1. Each quarter will have 13 weeks. Week 1, week 2, week 3, week 4. Week 5, week 6, week 7. Week 8. Week 8, 9, 10. Oh, that just didn't come out right now, did it? It's supposed to be 13. What the fuck? March has more. Why am I missing March? Oh, that's what I'm missing right there. All right. That's what I'm missing. 1, 2, 3, 4, 5. I was missing the last week. 6, 7, 8, 9. 10, 11, 12, 13. 13 weeks in each quarter. Week number 1 looks the exact same in the first quarter, the second quarter, the third quarter, and the fourth quarter. Every single week is the same over and over and over again. JBLU, I can tell you no right now, unless you really want me to look it up and tell you no in a few minutes. JBLU. JetBlue, seriously, they're not 20 years old. Come on. Remember when I said 2 decades of increased profits? JetBlue's not years old. MPW. All right, that's a no. No, not 20 years old. If it's not 20 years old, there's no possible way it can have 20 years of increased dividends. Okay, Stephen? Yeah, it's okay. You're new here. Not a problem. I'm here every night. Just keep coming back, keep asking questions. That's the only way you learn. And I'm okay with you asking questions. Okay, MPW, that's what we're looking at. 1 year chart. Here's the double high. Look at that. High, low, where was it? Where is it? Look at the movement. Up, down, up, down, up. Okay, fine. What's up, Mark? Let's take a gander. Before we look at the chart a little more, we're going to take a look at the numbers. What are the numbers? Well, the top line are the stock numbers. You got the open, the high, the low, the close, the volume, all that kind of stuff. See? Open, high, low, close, bid, ask, volume. It's all the information you need to know on a stock. Mark, have a good night. See you tomorrow, if you're going to be here tomorrow. Now, tomorrow's Thursday. Yeah. So tomorrow night will be my last night for the week. Because I don't do Friday nights anymore, and I don't do Saturday nights anymore. Last year, it was every single night. 3 hours a night, every single night last year. Not this year. All right, anyway. 442, the closest one's going to be the 450. 450 is going for $12. Now, $12 is just a smidge, 12 cents per share. $12 per contract. Same thing. 12. Well, that's 3.5%. Well, I like 3%, especially on MPW. Now, I own a bunch of MPW. All right, that being said, a year ago was the bottom of the year, 308. Now, one high is 630. That was in mid-May. And then we hit again at 647. Is that right? The high, 654. Okay, and 655. Okay. That was in September. Okay. But look at from the high in September. Freaking cord. High in September, she kept dropping right here. Then she shoots up. What's happening here? We have 2 days to the downside. But look, down, up. Now she's coming back down again. Well, is it really coming back down again, or is it just going to be profit taking for a little bit? Are you no. So let's take a look at the last 30 days, because the last 30 days gives me a better idea of what do I think it's going to do in the next couple of weeks. Because that's my concern. If I'm going to jump in something, I want to jump in on Monday and get out on Friday, and then do the same thing the next week. Unless, of course, the numbers work in my favor and I just want to hold on to it. I have no problem holding on to a stock if I can get 1-2% every single week. Well, that just makes perfect sense to me. All right, the last 30 days. 30 days ago today, we opened up at 373. A week later, on the 13th of January, there's the bottom right there. Okay, that was 351. See, the low, 351. Then she shoots up and pulls back. Well, here's your 30-day high. Now she's coming back down. Now, I already own it, so it's not, doesn't make sense for me to jump into it. But I already have it. So I'm going to keep on hold of it and just see what happens, because it gives me more than 1 or 2% every single week. So why would I get rid of it? It just makes sense. If it gives me 1 or 2% every single week, why would I get rid of it? All right, so that being said, what else we have? We got 99 questions here. So let's go through some of these and see what we come up with. RCB, what the heck is RCB? RCB. Ready Capital? No options. Really? Were you paying attention? RCL. Royal Caribbean. We already looked at that one. It's already a no. Okay, let's go in. Rena Boy, what's happening? Nebraska Mary, thank you. Uh-oh, I missed a bunch of questions. Oh, how about AT&T? RCL, we looked at that one. Enbridge, hell no. Ben, good evening, James. I appreciate your content. Appreciate it. I say, let's go ice fishing. I say, oh, hell no. Okay? I was born and raised in New England. Okay? I remember one time growing up, I think it was in the late 60s, early 70s, where the snow was up to my shoulder. I was a little kid then, but the snow was up to my shoulders. Okay? Yeah. No, thank you. How is Enbridge? E-N-B. E-N-B. Enbridge. No. See, Enbridge is a monthly optionable stock. I don't do monthlies. The numbers just don't work. Nebraska Mary, he doesn't know how to look up a ticker. Well, yeah, I do. I'm just prefer you guys do it. Made money on RCL. Well, so did I a few times. Christian, greetings from Germany. Ooh, my German is really rusty. Nope, Avita's saying that's goodbye. Don't be sloven. Sorry, my German is really rusty, so I can't help you out with that one. James, do you on a weekly basis screen all 300 the Dividend Kings champion? No. Okay, CR, right here, take a look. Let's open up this account here. Okay, and let's go to here. Let's get rid of this. Let's go to here, and let's go to... That's the wrong account. This one. Okay. Oh, that's why. I'm looking at the wrong thing. Give me 1 second as I get this warmed up. It's coming. Hold on. There it is right there. All right. Make it small enough so we can see it. Bring it up over here. Uh-oh. There we go. All right, now we're going to go to here. And we want to get this out of the way. We want to open up this right there. Oh, look at that. I don't like that list. Let's go to this one. All right, here we go. Now, do I look at all 300? No, I do not. When I say I buy stock, now here's the thing. You find a list of stocks, put them together, throw it into a calendar. It tells you when they have the dividend. Why is that important? Each one of these little green dots represents an EX dividend date. Now, there's 4 dates to remember when it comes to a dividend stock. Number 1 is the announcement date. That's when the company says, hey, my name's James from Dividend Stock Talk. This is what we made this year. This is what we're paying out in a dividend, and this is when you get paid. Number 1 is the announcement date. Ooh, Jamar wants to look at T-Mobile. T-M-U-S. Okay, give me a minute. I'll take a look at it in a little bit. Number 1 is the announcement date. Number 2 is the EX dividend date, also known as the last day the stock trades before the dividend is paid out. And that is represented by these cute little green dots all over the calendar. If you want to buy a stock and collect the dividend on Lowe's, here's Lowe's right here, January 2025. The dividend is on the 22nd. It is $1.15. Announcement date, EX dividend date, date of record, and payment date. Okay? The reason why we put it into the calendar, listen closely, this is very important. Stocks, dividend stocks, have a tendency to go up in price just before the EX date. So if the EX date is here, and I know that the stock moves up in price before this date, I want to buy it 2 weeks before on a Monday. Reason why on a Monday I do covered calls, I get the most value on a Monday. So, EX date, 2 weeks before on a Monday. The reason why is because if I'm buying it 2 weeks before on a Monday, I buy it in the morning at the market call, and I sell a covered call. If by Friday I am out with my 1%, thank you, I am done. If not, I will take it into the next week, and I will do it again. If I get called out, great, I move on to the next one. But if I don't, I will do it again. And the dividend is right here. So listen to what I collect. 2 weeks before on a Monday. 1%, I hit my target. Great. If not, I'll do it again. 1%. If I hit my target, great. If not, I will do it again. 1% and a dividend. If I hit my target, no, great. I'll do it again. And I will keep on getting 1%, 2%, 3% dividend, 4%, 5%, and do it every single week until it hits my target. Well, if my target is at the money or higher and in an uptrend, where's an uptrend? Uptrend. Okay, that's a downtrend. We don't want that one. All right. 30-day high, 30-day bottom, uptrend. If she's in an uptrend, that's what I'm looking for. If she's in a downtrend, especially in the 30-day time period, 30-day bottom, 30-day top, downtrend. It's not that difficult. Adults have a tendency to make this more complicated than it needs to be. Okay? And men make this more complicated. Women are better traders. They are, because they're logical and they don't mind asking questions, asking for directions. And they don't mind being wrong. They won't admit it, but they don't mind being wrong. Okay? Anyway. So no, I don't look at all 300. I only look at those that are having their dividend the week in question. So, first week in January, John Deere, Mondelez, Nucor, U.S. Bank, Cardinal Health, American Express, Bristol Myers Squibb, Cisco. That's it. Nothing else. Okay? Next week, J.P. Morgan, Comcast, MasterCard, General Mills, AT&T, MasterCard, Verizon. That's it. I don't want to look at anything else. Okay, you think you're under the impression that I buy 5, 10, 15, 20 stocks at a time. No, I only buy 1 or 2 because I carry some over from the previous week. I think in the 15 years that I've been doing this, now I've been trading for 20, I've only been doing this particular strategy for 15 because my first 5 years weren't that glamorous. Okay, it wasn't until my daughter jumped up in my lap and said, "Daddy, teach me." And then it's like, she's making 5% every week. I said, holy shit, what am I doing wrong? She's making more money than me. So I use the strategy which I created for her, and I don't do anything else. I'm spending less time in front of the computer. I'm making a consistent 50% or more every single year. Fine by me. Okay? Now, Candy, this is the best use of time, I promise. It's so simple and profitable. I'm about to stomp out this strategy weekly. Thank you. All right, Candy, I'd like to hear your story. Let me know. Drop me your number. We can chat. I'd like to hear your story because, I like to be motivated by people that, similar to me. Because a lot of people getting ready to retire, they can't quite figure out where the hell the money's going to come from. Well, if you can get 1%, whatever you have in your account, okay? Now, you may not be 60 or 65 or 70, wherever you plan on retire. But people retire for 3 reasons, okay? 1, you get too damn old, okay? 3 reasons to retire. 1, you get too damn old. And they just say, don't come back to work, you're too old, you're a health hazard. Something like that. They probably say it more eloquently. Yeah, well, Candy, I give this away for free. So think of it this way, Candy, if I'm giving this away for free, what do you think the people in my morning trading group are getting when they're paying for something? Think of it that way, okay? I have a lot of trading strategies, but I only give this one away for free because I consider this as a stepping stone. You learn this, great. I'm helping out people, wonderful. You want to join me in our morning trading group? Fine, come along. So there's plenty of room. Okay, we come on every single morning. I'm not trying to sell anyone anything. Okay, I don't know if you've noticed that. I've been on for almost 2 hours and I haven't said anything about anyone buying anything. How do I find your number? You send me your number, I will call you. This is what, no, don't put your number online where people can read it. Send me a DM, goes directly to me. Now, there are about 30 people pretending to be me. So if you get a text message, an email, a video, or anything other than a personal phone call from me, it ain't me. Okay? So when I say, if you really want to talk to me, I have a conversation now, and I won't try to sell you anything. I promise you, I won't try to sell you anything. As a matter of fact, I will try to talk you out of it, because this is not for everyone. It bothers me when people have a bad taste in their mouth about something. If this is not right for you, don't do it. It's simple, it's easy, it's predictable, it's slow, it's boring as hell, it's monotonous, it's the exact same stocks week after week after week. You're passionate about this, I can tell. Yeah. Well, yeah, I am, because you know what? I grew up in the 60s, 70s, and 80s, okay? I'm used to getting the short end of the stick, the brown end. Okay, we all know what that means. I'm used to getting the brown end of the stick. Because the powers that be, whatever you want to call it. This is what you do. Yeah, I hate being told what to do. Really do. And I go to one of these money managers or whatnot. Says, yeah, great. Well, you need $3 or $4 million to be able to retire. I said, what? Okay. Do you know how long it takes the average working person to come up with $2 or $3 million in order to have a decent retirement? A lot of people will never do it. But here's the thing. If you could get 1% every single week and just leave it alone, you'll double your money every 16 months. That's not that bad. If you add you know what? Let's do this for the fun of it. I don't know who wants to volunteer for this. Let's go here. Let's go there. Okay, this is my website. On my website, I had to create this myself because nobody else had one. It's called a weekly compound interest calculator. All right, see that? Weekly compound interest calculator. Let me show you how it works. Not that difficult. Alrighty, let's start out with $100. Okay, just $100. And let's commit, for the fun of it, to $10 a week. Not that much, $10 a week. Hold on. Now, I'm showing you how to get 1% every week. So let's change this to 1%. Okay, now commit. This is just a rough idea. Commit to invest $10 a month. I'm sorry, $10 a week. Okay, $10 every week. Okay. Now, after 1 year, you'll have $845. Not a lot, but how much did you put in? You put in 620, which means 225 was all profit with interest. Now, let's go to 10 years. $193,000 in 10 years. But look how much you put in. You put in $5,300. You started out with 100, put in $10 a week. Invested every $10 every single week at 1% a week. It's a simple strategy. It's boring. It's the same thing over and over and over again. But the end of 10 years, you would have made $188,000 just interest alone. Just interest alone. You change any one of these numbers. So you start out with $1,000. Okay, you put in $100 a week. What does the number look like after 10 years? It's going to be a scary number. It is. Somebody might not be able to comprehend it. Okay? $19,300,000. The numbers are absolutely freaking crazy because of compound interest every single week. So you can double your money every 16 months. If you add money to it, you can double it a lot faster. That's the beauty of compound interest. Now, nobody had it calculated before. I had to create this stupid thing. Okay, so how do you take your money and increase it every single month, every single week? Well, it's the number multiplied by 1.01. Well, then you're going to add money to it. So it's the number plus whatever you're going to add to it, multiplied by 1.01. And then you do it again. You take that number, add a number to it, multiply by 1.01. And you do that 52 times for 1 year. And then for 10 years, you do it 520 times. And then you get a crazy-ass number like this. But not many people are going to do this because sticking to something is not that easy. And once you get 100 million, you might change your tune. But this is 193 million. Oh, sorry, not 19 million? Sorry, 19 million. Sorry, 19 million. Okay? So it's a compound interest calculator. Play around with it. I mean, it's free to use. I mean, just stick in any number. Whatever you have. You got 5,000, 10,000, 20,000, 100,000, 50,000, whatever you have. Put it right in there. And then commit to a number that you can put in every single week. $5, $10, $100, $500, whatever. And then do 1% a week. Okay? And how many years? 1 year, 5 years, 10 years, and see what it could be. Okay, so you're 35 and you want to retire in 5 or 10 years. Well, great. How much do you have to do in order to do that? Because you need a certain amount of money every single month to live. Well, how much do you need? Do you need $4,000 a month? If you need $4,000 a month, you can retire comfortably with $100,000, because $100,000 is $1,000 a week. That's over $4,000 a month. And it's a lot easier getting $100,000 than it is to get $1 million. Because if you get $1 million, you get a 4% draw. A 4% draw is going to give you what, 40,000? 40,000? Yeah, no, thank you. I don't. That's one of the reasons why I only do this strategy, because I don't like what the establishment says we have to do. Because the federal government says you have to make a draw on your retirement account. I hate that shit. No, don't tell me I have to do anything. I'm Generation X. We don't care. Honestly, we don't. We prefer to be left alone. Don't tell me what I have to do. Because you telling me what I have to do, I'm going to do the opposite. Just to piss you off. Anyway, let's get out of here and let's go back to looking at some stocks. Okay, so yeah, step number 1, grab a list of stocks. Whatever they are. Dividend Kings, Dividend Aristocrats, Dividend Champions, whatever your favorite stocks are that you don't mind buying and holding on to forever. Put it into the calendar. The calendar will tell you when it's having its dividend. The dividend tells me when the stock goes up in value. Because when the stock goes up in value, it makes it easier to buy it, sell a covered call, profit from it, and get back out within 5 to 10 days. That's what I'm looking for. Simple, safe, predictable, consistent, 1% per week. Okay, so what are the questions we got? It's almost 11 o'clock, and I still have almost 100 questions to go through. All righty, Cliff. Just look at JAAA. It pays 6.35%. Cliff, you know what? I'm going to do you the favor. I'm going to look it up. I'm going to tell you no now. Okay? JAAA. And I was right. It's a no. Look at that. Monthly options. I don't do monthly options. The numbers just don't work. Terribly sorry, Cliff. Monthly options. You're allowed to do it once a month. That means I'm going to sit in front of my computer all day watching the chart to see when a good time to jump into this thing. And this thing looks absolutely horrible. Look at it. Okay? She goes up, big drop. She goes up, big drop. Now, if that is true, if that is consistent, easy. You buy a covered call here, or you do a spread. Here, you can triple your money, boom. Triple your money, boom. If you know the right trading strategy to do that. Leave me alone, period. Yes, we are Generation X. Just leave us alone. We prefer it. Okay? You can take me, drop me in the middle of the woods, and I will be perfectly fine. Okay? Leave me alone, all that kind of stuff. Okay. I said it was a tier. Okay, Mary. Okay, Kian, Tesla. No. I'm going to give you a quick reason why I'm saying no to Tesla. Tesla has no dividends. Without a dividend, I cannot tell when it's going to move. Because most stocks that have a dividend increase just before the dividend. So I know exactly 4 times a year I can trade each stock safely. Simple, safe, predictable, consistent. It's right in my mantra. Simple, safe, predictable, consistent. Knowing when a stock is going to move consistently gives me a good idea what's going to go on. 51. This baby's getting ready to drop again. February 21. The 51s are going for 5 cents. What are you shitting me? Are you seriously shitting me? You want... Really? Look at this. It's at 51. If I buy it at 51, sell somebody the 51s, I'm getting 0 to 5 cents? Hell no. I don't know what the hell you're smoking. No, 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 double hell no. All right, let's keep on going. Christoph. Sweet Jones, we already looked at Macy's today. Sorry, brother. United Airlines. UAL. You want to hear a funny story? I made a shit ton of money on VAL, because I typed it in wrong. I thought I was buying United Airlines, and I bought it VAL. I don't even remember what it was. But the thing tripled in price in a couple of days. I said, oh, well, that was a happy mistake. All right, so United Airlines. We're not going to look at this week because the number's not going to be that good. It's at 108. It's going to be a no only because, look at this. Here's the bottom here. Here's the top here. Okay? The profit taking hasn't even started yet with the United Airlines. Alice, Wally World, huh? WMT. Try it again. WMT. Wally World, there we go. No, it's at the high of the year. Okay, I don't buy anything at the high of the year. It makes no sense to me. You're going into territory where it's never been. Now, it may have been there last year, the year before, but it's never been there this year. I'm not looking to blaze a new trail. I'm not looking to be, you know, an explorer trying to get to a land as nobody's ever been before. Okay, Walmart has not been at $100 at all this year. Why do I want to be the first one to see if it does? Yeah, no thanks. Fantasy Slayer, AVAX. Never heard of it. AVAX. Can we all say no? We can't find that symbol. No. iPhone 16. I have no idea what that means. SoFi. Stack Bundles wants to look at SoFi. S-O-F-I. Now, we haven't done this at all, so let's do it now. First and foremost, the high's right here. She's coming down, so it's going to be a no there. But, hold on a second, because I have somebody almost every single day asking me about SoFi. So I'm kind of hoping that you never ask me again after I show you this. S-O-F-I. Now, we are on Yahoo Finance. This is a financial website where you can get financial information. I use it for historical data, okay? Historical data, basically, how consistently have they increased their dividends? How often has this price gone up? Okay, oh, would you look at that? There are no dividends in the time period selected. So, no dividends... No, thank you. So it's kind of an interesting question. The name of the show is Dividend Investing for Weekly Cash Flow. So why would you come here and ask me about a stock that has no dividends? Okay, so why are we looking at it? No dividends, no thank you. It's simple. No dividends, no thank you. Michelle Boudreau, you enjoying the cold weather up there? It was nice out today. I was in a t-shirt. Seriously wanted to go to the beach today, but nobody wanted to go to the beach. I don't know why. DPZ. What the heck is DPZ? Never a good sign if I say, what the heck is this? DPZ. Domino's Pizza. Oh, hell no. Okay, 427. Okay. DPZ. Domino's Pizza. Let's see how well they increase their dividends. A maximum amount of dividends. Ooh, actually it doesn't look that bad. Uh-oh, what was that? Okay, 2004. What is that, 21 years? 7, 10, 12, 20, 25, 31, 38, 46, 55, 65, 78, 94, 110, 121, 151. Nice! I like that. Domino's Pizza. A little out of my price range, but okay. I like to stay at stocks under 200 bucks, personally. But this one's over 400 bucks. All right, well, let's take a look at the numbers. Okay, here we go. A year ago, we're right here. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, sideways, up, down, 430. The 430s are going 380 to 790. Okay, so you will get your 1% there. If you got it, it's good. Yeah. Okay, I get it. You know, right now, I stick between stocks between, what is that, $5 and 250 bucks. So as I get richer, maybe I'll go from 50 bucks to 500 bucks. But at the moment, I'm stuck at 5 to 250 bucks per share. Anyway, it doesn't look like a good buy at this moment in time. Here's my reasoning. Are you ready for my reasoning? Here we go. Me too. I'm barely over 10 bucks. I hear you, Candy. All right, so 30 days ago, we're at 424. Shoot up, pull back. Here's the bottom here, right around 400. Shoots up here at 450, drops back down. Yep, you got profit taking for the next week or so. So normally, I'd wait for it to go down here to 405 area, 410, somewhere down here before I would jump into it. But like I said, I don't do stocks over 250 bucks. I like to stay a little lower until I add a couple more commas or a couple more zeros to my account. Until then, I'm stuck where I'm stuck. It's 11. Okay, Gerald. Okay, we already looked at Ford. Is this something we can do once a month versus weekly if we wanted? God's Goodness Podcast, of course, but the challenge you're going to have doing it once a month is predicting where is a stock going to be in 30 days. Let me show you quickly. Let's move this over to here. Okay. Okay. This is a 1-year chart. Okay. Here's your high. Here's your low. Here's where it was. Here's where it is. Look, she goes up, down, sideways, up, down, up, down. Okay, fine. Great. That's the whole 1 year. Okay. The last 90 days looks something like this. The high, the low, where is it? Look at the movement. Down, up, down, up, down, up, down. Okay, get you a good idea. Now look at the 30 days. The 30 days where it's going to get really confusing for you. Okay? Here, 30 days ago, 420. Shoots up to 440, drops down to 400, shoots up to 450, drops down to 430. Okay, great. Now tell me it's going to be in 30 days. Because this is the 30 days right here. That's all 30 days. 5 days, okay, on a weekly, 5 days, more than likely it's going to be down here, 420, 415. Because she's coming down off of a 30-day high. That part's easy. Now tell me where it's going to be in 4 weeks or 30 days. Not as easy. Okay? But you could do it. But not as easy. Okay? Kevin, AT&T. Nope. That was quick, wasn't it? Nope. Now, look at AT&T. Now, we had this problem with AT&T last year, okay, where she just goes from April all the way up until the beginning of December. It was just straight up. Now, in December, they had that profit taking. Pulled back a little bit. Now she's going back up again. It is now currently at the high of the year. Now, I don't buy anything at the high of the year. Me, I'd preferably wait for this thing to pull back a little bit and then turn around and go back up again. Other than that, no thank you. Okay, don't. Okay, Usman Khalid. We already looked at Enbridge. No, wasn't that ENB? Wasn't that monthlies? ENB. Yeah, Enbridge, monthlies. I don't do monthlies. You've been here long enough to know, Khalid. Pepsi or Coke? Hey, 86 just showing up. Nice. All right, Pepsi. P-E-P. Here we go. Down, up, down. Okay, no Pepsi. Look, 30 days ago. Down, up, down. Yep, it's coming down off of a high. Altria. Wait, look at Coca-Cola, then we'll look at Altria. Same thing with Coca-Cola. Down, up, down, up, down. No, sorry. Uh-oh, uh-oh. Wow, I missed all these questions. There's got like 100 questions here I haven't gotten to yet. Kroger. Where are we? Wow, I have to start answering some of these questions. Pepe. Okay. How did I end up back here again? Blur, I have no idea. Okay. All right, Alice, add funds to your account, blah, blah, blah. I just started watching your vids. Love it. I've never traded. Ooh. Okay, Goat Farmer, 76. Cool bean. Yeah, I want to get this. I'm looking at an old farm on 7 or 8 acres. I'd like to get some goats and some sheep, mow the lawn. Alrighty. What fundamental knowledge do you need to start? Oh, wow. Okay, Okie farmer. Okay, Okie goat farmer. Hold on a second. The strategy you're currently looking at was created for a 9-year-old. So you got to put yourself into a 9-year-old mentality. Do you know how to count? Do you know up? Do you know down? Do you know high? Do you know low? Do you know how to add? Do you know how to subtract? It's all simple stuff. Okay, first of all, this is our 30-day chart. Okay, I like to look at the 1-year chart. It gives me an idea of what the company has done all year long. Okay, this is a 1-year chart. Gives me an idea. Here's the high. Here's the low. Here's where it was. Here's where it is. 5 things I'm looking for. High, low, was, is, direction. Sideways, up, down, up. Simple, right? Now we want to jump into the 90-day chart, which is the last 3 months. Same thing, 5 things. High, low, where was it? Where is it? Direction. Down, up, down, up. Simple. Now we want to go to the 30-day. While we're on the 90-day, we want to look for patterns. Well, there's a pattern. Down, up, down, so on and so forth. Okay. 30-day chart. Now the 30-day chart gives us a better idea of where we think it's going next. Now, certain things you need to remember. First, we're looking for 5 things. The high, the low, where was it, where is it, and what's the direction? 5 things. Down, up, down, up, down. Now, that should give you an idea based on childhood playground, a seesaw. Up, down, up, down, up, down. That's all stocks do. Okay? Up, down, up, down, up, down. So it's going to keep coming down until it turns around, goes back up again. Well, see what happens when it gets down? It gets to a bottom, and it slowly goes back up again. That's what we're looking for. Right here, there's your 30-day high. You can only have one 30-day high, one 30-day bottom. At 30-day bottom, usually the stocks go back up again. 30-day high, usually the stocks come down. It's really not that difficult. A plus B equals C. C plus D equals F, so on and so forth. So, that being said, next. Stocks are manipulated. Okay, thank you for that. 86. A Roth IRA is a type of account, not an investment. An index fund is an investment, not an account. Okay, great. Chicken Joe, how much is recommended for a beginner wanting to learn? Okay, Chicken Joe, it might not be bad. No, it's not a bad question. Okay, now, Chicken Joe, you have to realize something. We are all different. There's about 500 people here. There's about 7 or 8 channels, okay? We got YouTube, Facebook, Instagram, 2 TikTok channels, 2 YouTube channels, a Rumble channel, and Twitch. I think a Twitch channel also. Okay, all of those different channels. There's about 500 people here right now. Each one of us has a different amount to start out with, has a different comfort level, has a different risk factor. You may think something's risky. I might think, hey, not a problem, okay? Also, getting started, you got to start somewhere. My suggestion, always, 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 start with paper trading. See down here, get 3 accounts, okay? 1, 2, 3. Now, I have 7 accounts altogether, but I only share 3 of them with you guys. Paper trading account, live account, live account. Now, I've been paper trading for 20 years because I still make mistakes. I never claim to be perfect. Last year, I hit the wrong button 3 times. I lost $3,500 because I hit the damn wrong button 3 times. It happens. I've been trading for 20 years. I've been trading, and I hit the wrong button 3 times last year. Always double check before you hit that send button, because once you hit that send button, it's out of your hands. All right, so let's keep on going. So yeah, Chicken Joe, paper trade first. Get used to it. There's a lot of things that you're going to change. Number one, you got to change your thinking, because you're now trading and you're now investing for weekly cash flow, not monthly, not quarterly, not annually. Because most people buy, hey, let's buy the stock, let's see what happens in a year. A year's a long freaking way away. Okay? Now, I get a little frustrated because Monday and I want Friday to get here. But when Friday gets here, I say, where the hell did the week go? Okay? But Friday's what, 2 days away? It's like right around the corner. Didn't we just have Friday like 2 days ago? Anyway, let's keep on going. So yeah, it's different for everyone. It's not a bad question. You know, it's a question that I get asked like 2 or 3 times every single night. You're new, what should you start out with? You should start out with an open mind. That's it. Start out with an open mind and just follow the prompts. First thing you want to do is download Thinkorswim. It's free to download, doesn't cost you anything. I don't make any money off of me suggesting you download it. Okay, download it, practice on it for a little bit. It is owned by Charles Schwab. They will let you use it for about a month or so, but then they're going to want you to continue to use it, put money into an account and start trading with them. Figure out who you want to invest with. Okay, now I've been using Thinkorswim for 20 years, but here's the thing. When I first started trading on Thinkorswim, Thinkorswim was its own entity. They got bought out by TD Ameritrade. Okay, then I had to trade with TD Ameritrade, but I still use Thinkorswim trading platform. Now TD Ameritrade got bought out by Chucky. Charles Schwab owns it now. So I had to move all my accounts from TD Ameritrade to Charles Schwab, but I still use Thinkorswim. Okay? It is extremely complicated when you first turn it on. But once you get rid of all the fluff, it's like 98% of all the perks on Thinkorswim, I got no clue about. I don't. And I have no desire to learn. Okay? I'm 61 years old. I'm what you call a Gen X. I really don't care. What I'm saying is I grew up with. If it works, don't mess with it. I get 1% every week for the past 15 years. 1% every week for the past 15 years. Okay? So why would I mess with it? And I don't want to look at anything. Oh, this trading platform is better. Yeah, really don't care. This one works perfectly fine. If it ain't broke, don't fix it. Don't fix it. Simple. If it ain't broke, don't fix it. I loved my Windows 95. It was my favorite, operating software. Then they forced me to upgrade to 97. Then they forced me to go upgrade. I still like 95. It worked perfectly fine. Why the hell do you have to mess with it? Anyway, Kava, sorry, Gear. Kava has not been around for 20 years yet. Sigma. Sigma Enigma 2021, 500 bucks. I have no idea what that means. Wendy's, yeah, no. What website is that? Jacob, that is Think or Swim. It's not a website, it's an actual trading platform where you actually buy and sell stocks. Okay, it's owned by Charles Schwab. Okay, I make no money whatsoever by recommending it to you guys. It's just what I use. Now, I wrote a book 15 years ago, choosing the right trading platform. And I looked at about 30 different trading platforms. Floated around, looked up. This is the only one that had everything I wanted. I was basically looking for what's called a trigger trade. And then probably a lot of you don't even know what that is. And I'm not going to tell you because I give enough away for free. But it was the only trading platform that had it. So that's why I chose it, I picked it, and I stayed with it. Alrighty, let's keep on going. What's up, Jim? XRP analysis. You ready? XRP. I get asked for this every single day. Okay? Do you see that right there? XRP. We can't find this symbol. Do you know why you can't find that symbol? XRP is not a dividend stock. That's why. XRP is not a dividend stock. Simone is in the house. Hey, Simone, how are you today? Riley. Ooh, somebody wants to take a look at our Riley. Oh, I love Riley. I actually have Riley in a bunch of different accounts. Now, doesn't that look absolutely horrible? Well, if it looks so horrible, why am I making money on it every single week? Why? All right. Here's our high, here's our low, here's where it was, here's where it is. Look at this. Down, up, down, big drop, sideways. It's been going sideways since August. Stuck in that little channel right there. Well, if I'm getting 1 or 2% every single week, why would I want to get out of it? Good question. Potter Stocks PBS. Well, Potter Stocks, I feel bad about the next thing we're going to do. However, let's take a look at Riley. All right, so the last 90 days for Riley. Okay, here you go, last 90 days. Down, up, sideways. We're at 466 at the moment. Look at the last 30 days. Last 30 days. It basically just went sideways. Look at this. Up, down, up, down, up. Okay, great. I like Riley. Riley, I consistently make money every single week. Now, you may not think so, but take a look. 466 at this moment in time. The closest strike price is going to be the 455. Well, the 450 is going for 29 cents. And I know you're probably thinking, 29 cents is not a lot. Well, you're absolutely right. 29 cents is not a lot. 473. Wait a minute, I'm losing 23 cents. Ugh, take 23 cents off of that. Then I'm walking away with 6 cents. Well, 6 cents is 1.5%. 1.5% for the week. Now, if I get 1.5% for the week every single week, that's 76% per year. Sometimes buy, call is win. Hedgehog, how are you today? Sometimes. But I don't buy calls. I sell them. All right, so that's Riley. I do like Riley. I do have a bunch of Riley. Now, we're going to do one more stock, and that's it. Then I'm going to answer questions. Because I got a lot of questions to answer. And my question is, in my last stock of the day, I got to pick on someone because I haven't picked on anybody all day long. And guess who it's going to be? It's going to be Potter Stocks. Because Potter Stocks thinks QYLD is the best dividend stock ever. Well, I just love peeing on someone's parade. Let's do this. QYLD. Tra-la-la! Here we go. $18.41. Look at this. The high, the low, where was it? Where is it? Look at this. Nice movement. Cool. But here's the thing. Monthly optionable stock, which means I can only do a covered call once a month. Once a month means I'm getting anywhere between 12 and 24% per year. Now, you may think that's good, not me. But wait, it gets worse. It really does. Now, this is my favorite part. Now, we're going to go over to Yahoo Finance, and we're going to put in QYLD. QYLD. Only because I really want to piss this guy off, because he thinks this is great. Well, I don't. And we're going to, this is just my take, okay? Some of you guys might like this. I don't. And there's a reason why. Well, reason number 2. Reason number 1, it was a monthly optional stock. I don't do monthlies. The numbers just don't work. It's just not worth my effort to do one. 12 to 24% doesn't thrill me. It really doesn't. If there are stocks that give me 1 or 2% every single week, why would I do one that 12 to 24 when I can get 50 to 100? Okay, I didn't go to college, but I do know that 50% is a hell of a lot better than 24. I do. But, you know, I'm not a college graduate, and I feel bad about that time. No, I don't. Anyway, let's take a look at the dividends. Now, you think this is a great, wonderful stock. Wonderful, great. Well, if you're putting money into a company, well, let me rephrase that. If I am putting money into any investment, into any company, I would prefer, wait a second, I demand increased dividends, increased profitability. I will not put money into a company that's not increasing its profitability. It just doesn't make sense. Okay? So, if QYLD is so great, number 1, it only has 10 years worth of dividends. 10. That means it's not going to get on my list for another 10 years because I want 2 decades of increased profitability. Keyword, increased profitability, which means the dividend should go higher and higher and higher and higher and higher, all right? Every single dividend should be higher and higher and higher. Let's take a look at the numbers. You ready? January 22nd, 2014. 26. 19. Hold on a second. The very first dividend is 26. Shouldn't the next one be higher? 27, 28, 29? Why is it 19? Why are they profitable and then not profitable? Why? Starting out terribly. But hold on. It gets worse. It really does. Okay. 26, 19. Backwards. 19, 26, 25. Backwards. 21. Backwards. That's 3 times it went backwards. 21, 22, 20. Backwards. 24, 14. Backwards. 23, 16. Backwards. 15. Backwards. 17. 15. Backwards again. We're going backwards 8 times already. And we're not even into what? 2015 yet? Okay, that's 8 times went backwards. 15's right here. 20, 22, 21. 9 times. 18, 10 times. 22, 22, 16. 11 times. 17, 20. 14. 12 times. 13. 13 times, 19, 15, 14 times, 16, 15, 15 times, 13, 16 times, 10, 17 times, 12, 15, 13, 14 times, 22, 16, 15 times, 20, 15, 16 times, 13, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40. Okay, so this thing has paid dividends for 10 years. Out of those 10 years, it pays every single month. Well, 40 times. the profitability went down. Went up, went down, went up, went down, went up, went down. How the hell can you stand there and tell me this is the best dividend stock ever? When I look at a dividend stock, I want to see something like this. Eight, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Consistently increasing. Huge difference. Consistently increasing. QYLD, up, down, up, down, up. No, thank you. But wait, QYLD does get worse. Really does. QYL. Now, let's take a look at the statistics or the summary for QYLD. Here we go. You ready? Come on. Here we go. All right. So here's all the statistics. Net assets, previous close, open, high, low, close, day range, the 52-week range, the volume, the average volume, the yield. Take a look at the yield. 12.51. Okay, it's better than a lot I've seen, but that's still only 1% per month. So how can you possibly tell me 1% per month, 1251, is better than 1% per week, 52? 52, now I didn't go to college, I admit it, but I do know for a fact that 52 is higher than 12. How can you possibly tell me QYLD is the best dividend stock ever? 12%, 12.5%. Okay, if I'm getting 1% every single week, that comes to over 52% simple interest. Compounded, it's around 74% every single year. How can you possibly tell me QYLD is the best? Sorry, brother. Nope. Don't like it, never will, until those numbers change. All right, so we got like maybe 50 questions I got to answer. So Potter stocks. Hate to be the bearer of bad news, but I think you're wrong. But that's just my opinion. What do I know? What about AAL? Okay, we have to wait until tomorrow to do that one. What was the fact Tyrone said? I have no idea what we're talking about. Okay, Dooley. Okay, I get 7 channels going, and I have questions over here, questions over here, questions over here, questions over here, and questions down here. So who Tyrone is, I'm totally lost. Okay, a lot of stuff's going on. Okay, CJ Bowman. What about RX, RX? We'll have to see that tomorrow. Okay, I really don't like Kathy Woods. Sorry. She'll tell you she sold a lot of crap in her days. Holo, we'll have to look at it tomorrow. DHC, we'll have to look at it tomorrow. SPX, I'll have to look at it tomorrow. MRK, have to look at it tomorrow. Can you check Holo? We can check it tomorrow. Okay, we got 3 minutes for me to go through all these questions. Okay, DHT tomorrow. Hey, James, I think Alcoa had its first update today. Ooh, Andrea. We'll take a look at Alcoa tomorrow. AA. RX, we'll look at that tomorrow. Okay, Dooley, you like, oh, of course you do. Okay, Dooley. Okay, now, don't get me wrong. I appreciate you interacting. I appreciate, things. But really, try not to give me stocks that have monthly options, because monthlies just don't work, and it's just a waste of my time. It is. Okay, O Realty has monthly options. The premiums really aren't that great, and the numbers just don't work for me. If you want to do it, fine. Don't ask me to take a look at it. It's a waste of my time. True Firm. Wally, thank you, sir. PAA, Plains All American, for payable. Okay, now I don't like Plains All American PAA only because once you get out of the money, there's no premiums. Okay, at the money, nice premiums. Okay. Okay, one strikeout, the premiums are horrible. After that, there's nothing there. So I don't do, there's a couple stocks I don't do because the premiums are horrible. PAA, Plains All American, that's one of them. Jacob, how are you today? Stevie, what's happening? What's your advice for a finance major not knowing what area go in? Oof. I can't answer that question. I can't find anything good to say about a finance major. Go into banking. They're all crooks. I'm terribly sorry. DHT. No, sorry about that, Nay Perez. Okay. Why you're going to a finance major? What is it you're looking to get? What is it you're looking to do? I mean, do you find numbers that appealing? I don't know. I don't know how to answer that question. Okay. I didn't go to college. Okay. I had no desire to go to college. Not that I couldn't, I couldn't afford it. We were dirt ass poor growing up. But yeah, ENB. Okay, big brain. We already looked at Enbridge. DHT. We have to look at that tomorrow. DHT. DHT. So we got like 6 of them to top the list up for tomorrow. Billiam the Great. Thoughts on using Robinhood for newbies? I like Robinhood. I actually have a Robinhood account and I teach how to do Robinhood, this particular strategy with Robinhood. It's great for me. Friday I just sit there, roll your boat, roll. Excited, roll everything right into the next week. Very seldom do I buy stuff. I just roll it into the next week with Robinhood. It's as simple. You go to whatever stock you're looking at, click on it, pops up, roll order into next week, and you pick up a new position. It's simple. Kroger, love Kroger. Okay, Jacob, love Kroger. Ray Waddell, what's happening? Seabiscuit, Cool Beans, Grin and Barrett. Oh, that's a good one. Maneda Rivera, cool name. Kenneth Johnson, how are you? Dwayne, I need this bad. Kelly, come back every night, ask questions. The only way you're going to learn, for free. Yeah, but dividends are paid quarterly. How are you getting it weekly? Okay, I said nothing. Sigma Enigma. I said nothing at all about getting dividends weekly. What the title of the show is, Dividend Investing for Weekly Cash Flow. So I use dividend stocks along with weekly stock options for weekly cash flow. But it all comes down to the dividend stock and the dividend date. SO, Southern Company. Yeah, I know it. They're a no because they don't have dividends. XLK Carlos. Never heard of it. Sorry. Good looking. How are you today? Bobby the Electrician. How you doing, Bobby? Bronze. What about Pepe? Never heard of it. Now, you will see every once in a while when I say I've never heard of it. Most likely it's going to be a no. Because I've been doing this for 20 years, which means almost every single stock that has 20 years of increased dividends and weekly options, well, I know exactly who they are. So you asking me if I know something and I don't know it, usually because it's a no. Now, I have to admit, I have not updated my list this year because Dividend Kings List 2024 may not be the exact same as Dividend Kings List 2025. Good probability, but I just don't know. I haven't updated my lists. Lone Wolf, what's happening? Joan Didier, how are you? Jerry Patel, Albertsons, please. Okay, Jerry, come back tomorrow night because we're going to do the exact same thing again tomorrow night, just that hopefully I get it done before 11:30 because I'm usually out here at 11:30. Lone Wolf, David, I just got funded for my $150,000 account. Cool beans. Threading the needle. Macy's looking to be a good trade. Well, I actually own some Macy's. Matt, I don't understand rolling. Do you get a nice premium still or take a hit? I am assuming you roll your stocks will be called away. It depends. Sometimes yes, sometimes no. Okay, sometimes I just roll it because the roll is a nice premium on the other end. Sometimes I have to roll it in order to not lose money. So you're right about that point. But on Friday afternoon, it always comes down to the numbers. What did I buy the stock for? What covered call did I sell against it? What are the numbers looking like? And does it make sense to roll it? let it get called away, let it expire, or just take the profits. All going to be decided on Friday afternoon. Manny, a long-term recommendation for a dividend stock to invest in. I am investing in a Schwab dividend. Okay, so Manny, I don't do anything long-term. As a matter of fact, my idea of long-term is 30 days. That's it. For a Roth IRA, Manny, I'm not sure what to tell you. Okay, see, here's the thing. Now, people will buy a stock and collect a dividend once every 90 days. Okay, there's nothing wrong with that. Get a 4 or 5% return for the year. Now, I'm asking you to change your thinking. Okay, if you have a Roth IRA, not a problem. But make sure it's a self-directed Roth IRA that you can trade every single week. Because if you put money into a Roth and do a weekly trade like this, and every trade you make is tax-free and the returns are tax-free, you know, in 20, 30 years when you go to retire, trust me, the government will figure a way to tax that money. They will. Anyway, let's keep on going. Liquidity sweep. Okay. Manny, SCHD, oh my goodness, threading the needle. SCHD and VIG long-term for retirement will gap up and to growth. Hell no, SCHD is horrible, and VIG is just as bad. Altria Group, oh, I like the Altria Group. Threading the needle, appreciate that. I have some shares of SCHD. What the hell would you have? All right, never mind. Okay, you know, some people like that, I don't. You take it seriously. Take a look at the numbers for SCHD. How consistently have they increased their dividends? That's number one. Number two, what is the current yield for SCHD? I'll tell you what it is. Hold on a second. SCHD. You ready? You're going to be disappointed. Okay? SCHD has a yield of 3.64%. You would be better off putting your money into government T-bills. Government T-bills are paying 5%. SCHD is paying 3%. Come on, you know how to add. Okay, VIG is probably going to be the exact same thing. VIG. That's even worse. 1.73%. How could you possibly give, okay, threading the needle, how could you possibly give someone advice when you don't check the numbers? 1.7. At least the one we looked at before was paying 12%, and you're telling them to QYLD. QYLD is paying 12%. SCHD is paying 3%. This piece of crap is paying 1.7%. For the year, not the week, not the quarter, for the year. Manny, do your own research. Make sure it is something you understand. SCHD is paying 3% a year, and VIG is paying 1% a year. Hell no. Come on, what are you thinking, dude? What the hell are you thinking? Seriously. Walgreens. Yep, we'll take a look at that tomorrow. 3M. Ooh, like that one. Manny, can't go wrong with individual stocks. Should be trade on the side, lower percentage of portfolio. Wow. Jason, what do you think about Atom? No, never heard of it. What's the blizzard of 78? I'm just a few years your junior. I was in Dorchester in 78. Oh my God. You want to hear a funny story about the blizzard of 78? No, not many people believe me when I say this, but the blizzard of 1978 was on a Monday. Do you know how I know that? Because on Friday, actually, on Thursday, I threw a snowball at the bus. It went into the window of the bus and it hit somebody. On Friday, I got thrown off the bus, which means I had to walk to school on Monday. So at, I think it was like 7 o'clock Monday morning, I get dressed up, buzzed up, and I walk my ass to school through the middle of the blizzard of 78. And it was in the, once I got to school, it was like a 3-mile walk, okay? It was seriously 3-mile walk. And no, it wasn't all uphill, but there was some hills. I did have to walk up some, down some others. But anyway, it's a 3-mile walk from home to school. I get to school only to find school was canceled. But the vice principal, Mr. Dan Pierce, super nice guy. Here's a funny story about Mr. Dan Pierce. After I graduated, hey, Mr. Pierce, how you doing? No, call me, call me Dan. Okay, Mr. Pierce, whatever you say. I grew up at a time where we respected our elders. My first grade teacher, I still call her Mrs. Loring. I still call Mr. Pierce Mr. Pierce. I don't call him Dan. He says, no, we're adults now, you can call me Dan. Okay, Mr. Pierce. Anyway, so Mr. Pierce, the vice principal, drove me home. He went out of his way and drove me home 3.5 miles. He said, Jim, what are you doing walking to school in the blizzard? I had to leave at 7. The cancellations didn't come out yet because we used to listen to the radio for the cancellations. Nope. Blizzard of 78. I walked to school in it, in Marshfield. All right? So anyway, being said, how do you choose among strike prices in the money as much as possible, subject to hitting the 1%? Okay, CA all day, absolutely. Okay, so safety to me, consistency of profitability is number 1. Safety is number 2. So let's go back to where we were. Okay. If you take a good look at the numbers, okay, Marvel, 110. The 110s are going for 320. Okay, that's nice. The 109s are going for 350. Do the math. The math is really not that difficult. Yes, it is safer to go in the money. Okay, but at the money, you know, the 110, because we're looking at the 110, at the money is the highest profit. But usually the stock has to move up in order to capitalize on that. But you go up higher in the money, it's a safer trade. You get a little bit less rate of return, but safety and consistency sometimes is more important than profitability. Because we're all different here. We all have a different goal. My goal is safety and consistency of profitability. Well, now that is interesting. Anyway, let's keep on going. No, 41. We're almost done here. Big G creator, can you tell from the beginning? Okay, can I tell? Hey, Big G creator, what can I tell what from the beginning? Narinda Singh, Walgreens. I love Walgreens, I do. Eskimo Joe, how are you doing today? Lex Luz, what's happening? Pablo, ¿qué pasa, amigo? ¿Cómo está? Dog MD, Chasing Jack. With two full-time jobs, time is very limited, and this strategy, I believe, is going to work for me. Okay, you're welcome, Jack. Thing is, interesting, Jack, like when I used to work, like I've only been retired for a little over a year. Okay, I think I retired in November 2023. Before I retired, I had a full-time job. Okay, I did my trades before I went to work. Okay, I got up in the morning, I did my trades. I had think or swim because it's a set it and forget it type scenario. It had what's called a trigger trade, where I can buy and sell the exact same day without having to wait for anything to happen. You know, buy at the market, add X amount to it, or multiply by X, and then get out. Well, it was a simple trade. It's called a trigger trade. And it was the only one that did it. So that's why I stuck with Thinkorswim. And yeah, I did it before I went to work. 3 reasons for retirement. Uh-oh. I forgot about that. 3 reasons. Not 3 reasons, but 3 ways to retire. Way number 1, age out, which means you get too damn old. Been retired for a year, by the way, 2021. Okay, Alyssa, good for you. Congrats. Where was I? Oh, 3. 1, you're going to age out. You're going to get to a point where you are so old, your boss will say, hey, we got to talk. Come here. Nothing ever good happens when people say, we got to talk. You think that's funny? We got to talk. Usually. Aging out, which means you are too old to go to work. Yeah, brain rot. That's a good one. Now think about it. It's only three ways. One, you age out. Means you're too damn old to go to work. Number two, you walk out, which means you have enough money coming in from your investments. You can tell you tell your boss, you ready? Who can do this with me? Ready? One, two, three. You can take this job and shove it. I ain't working here no more. That is what everybody looks forward to, having enough money. Tell me what religion you follow. Nope, don't do that. Don't do religion, don't do politics. No, no, and no. Okay, sorry. Number three, so you got age out, means you're too old. Walk out, which means you have enough money, you don't need to work anymore. You don't need their shit, you can do it on your own. Number three, no, I'm not a Buddhist. No religion. Number three, toe tag, which means you die on your way to work, you die on your way from work, or you die at work. That's toe tag. Okay? Couple of my best friends. Okay, he was at my wedding. He toe tagged out. He was going to work, died. His brother on his way to the car. On his way, he walks out the door on his way to the car, he drops dead. Okay? Another acquaintance of mine, okay, died just after retiring. No. So, age out, walk out, or toe tag out. There's your only three options. And don't get me wrong, it will come. Bitch, moan, complain all you want, fight all you want. Old age is going to come get you. Eventually. It is. Are you prepared for it, or are you not? All right, let's keep on going. See, I like boring. You know, if you think about it, boring is kind of nice when it comes to investing. Okay? Make my investment and make 1%. Okay, fine. Next week I make my investment and make 1%. Fine. Make my investment and make 1%. You add up at the end of the year, that's 52% at the end of the year. Simple interest. Compounded, it's over 74%. What time do you trade every morning? Can we find you here and join tomorrow? Okay, Annie, unfortunately, the morning trading group is a paid service. So you actually have to pay to be in the morning group. And I do it at 9 o'clock every morning. So the market opens at 9:30. So at 9, we jump in, we take a look at the positions, because I share 3 accounts, so you can actually see everything that I do. Now, I'm not trying to sell anyone anything, but that, you know, the morning trading group is a paid service. Where do I find that calculator? Oh, Jacob, the calculator, well, number one, it should be in your computer. That's number one. Number two, it's on the trading platform. Let me see if I can find it on this one. Okay, let's close that. Nope. Right here. Calculator. Right there. Okay, so on Thinkorswim, the calculator is right there. Okay, you come down to the bottom, see a little plus sign down here? You click on that, this opens up, and these are all the fun little tabs you can put over on this side. You can do the same thing over this side, but I like to have just 2 minor things. I don't like seeing a whole bunch of things. Okay, what website is this? Kevin, this is Thinkorswim. It's not a website. It's actually a trading platform. That's what it is. Trading platform. Where do we get compounding interest? Oh, done. Oh, that compounding calculator. Jacob, you're talking about the compound interest calculator? That's on my website. I had to create that because nobody had one. Where do we get compounding interest? You invest every single week or every single month, and then you take your profits and you reinvest it. That's compounding interest. Don't. AMT. Can you explain AMT? I have no idea what AMT means. Dafa, you wanted to look at Apple? We already looked at it yesterday. We'll have to look at it tomorrow because I'm basically done. Your thoughts on DOYU? Again, we'll have to look at that tomorrow because we're past 11:30. Vlad, Macy's, we already looked at that. Ooh, Stewie wants to take a look at Leggett and Platt. Nice company. Zuber Jurish, AVGO. Ty, SCHD. Hell no. Stewie, I know it. Leggett and Platt is LEG. I got that. SO, Southern Company, nope. Yahoo Finance is good, thank you, I like it. Apple Earring. Apple Earring. Okay. AT&T and MU. AT&T, no, we already looked at that, but MU, yes. Sam, NUG, holy cow, I got 54 and it's 10 minutes of 12. NUGT, I'll have to look at tomorrow. Mysterio, Coiny, New York. Hershey, I have to look at tomorrow. ULS, tomorrow. Jefferson, nothing like paying tax on dividends on top of paying tax on gains. Only useful for HSA and Roth. Okay, hold on a second, Jefferson. I was waiting for someone to bring up taxes. I was waiting for someone to mention taxes. Here we go. Hey everyone, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. I'm going to answer a question you guys have been plaguing me for months. What about taxes?
We're in a voluntary compliance system.
Or is taxpayers who voluntarily pay?
It's in our voluntary tax system.
Our U.S. tax system is a voluntary tax system.
Well, this Saturday, February 1st, Kobe from I Teach Legal Tax Exemptions on TikTok is going to be joining me for something you guys have been wanting to see. Stay tuned for all the details down in the bio. See you there. Okay, now I've been asked over and over and over again, James, what about taxes? Okay, a lot of people have issues with taxes. Now, there's a lot of different avenues you can take with taxes. You can put your trading account into a trust, not have to pay taxes. You can put it into a corporation, pay corporate taxes, offset by corporate losses. Okay, you can put it into a family foundation. You can go down the route of almost anything. But I always tell people, talk with a tax strategist or a tax planner. Now, this Saturday, we're going to do a quick, kind of like an introductory idea. Okay, you're probably not going to pay for it because it's just a rough idea to see what we're looking at and see if there's a call for it. But it's going to answer a lot of questions about taxes. So, there is no analysis in that all. No analysis in that all. Jefferson, nothing like paying taxes on dividends on top of paying taxes on gains. Only useful for HSA and Roth. There's no analysis in that at all. Okay, Jefferson, I have no idea what you're talking about, but we're going to be talking about taxes on Saturday morning, I believe, somewhere around 9 or 10 o'clock. I'm not quite sure. I have to coordinate with the other guy just to see what time he's going to be available. Because I'm going to be teaching dividend investing for about an hour, and then he's going to be teaching about taxes. PM, Philip Morris. Kava, please, inside selling in the middle of January. So Kava has not been around for 20 years, so that's going to be a no. XCN, never heard of it. DHT, never heard of it. BP, British Petroleum, I like that one. Now, when I say I never heard of it, okay, I've been investing for over 20 years. Okay, I do this every single day. So I know who the dividend kings are. I know who the dividend aristocrats are. I know which companies pay a dividend every single 90-day period. And I know who has weekly options and I know who doesn't. James, where can we take a pic of your dividend calendar for next month? You can't. Have up the trigger trade. Yep. Oh boy, I missed some questions. I did. Estee Lauder. Ooh, nice. This method is credible or only a theory? Oh, Kyle, I'm glad you said that. Now, Kyle, you're new here. Over here is my webpage. Now, every single trade I did in 2024 is listed here. You can pick up any one. Here we go, right here. MU, which is Micron, Riot, Marathon. What did I make that mean? 4.5%. week 23, 10th week, second quarter. Oh, 0.6, only made a half, 0.6%. Intel, Kohl's, win. Week 14, Macy's, Albemarle, JD, Paramount, Macy's, 1.43%, 4.55%. What do we have here? AEO, Macy's, AT&T, Albemarle, JD, Bitto. Every single trade I have made last year is listed for you to check. Over here, this is the timestamp. What kind of a trade it was? Was it a buy or a sell? How many shares? How many options? The ticker symbols, the expiration dates for the options, the strike prices, the price, and the profits. Everything's listed. So yeah, it's a great theory, and it's a great reality. I've been doing this for 15 years. Let's slide all the way down to the bottom. Whoops. All the way down to the bottom. Okay. I first started doing this and sharing it through a blog back on August 31st, 2011. Okay, underneath that, here's a blog entry from 2013. Another setback this week, 10.5% overall. Weekly average slipped to only 1.3% for the week. That's in 2013. Okay, this one, what's this one? 2013, 28.1 total, not much movement this week. 1.56 average for the week. Well, all the numbers are there. See, I've been doing this for a while. So the only reason you're seeing it now is because you didn't subscribe to my blog 10, 15 years ago. You didn't subscribe to my YouTube channel. Where's my YouTube channel? My YouTube channel, my Twitter, my all the other channels, whatever. Hold on. Videos. 848 videos. Oldest.
Hi, I'm Macy, and me as you being part of my internet website called Thingy, which my dad didn't let me call me that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money. List number 1.
All right, that's the princess.
Stocks that you guys.
There's over 20 days in the month of January.
That's me. 15 years ago.
There's over 21 days in the month of March. What does that mean? That means every single day you buy a different stock. Every single day there's a different company paying out dividends.
Yay! That's my favorite part.
Cheers.
Okay, so this video is like 15 years ago. So I've been doing this for quite a while. You're just seeing it now because somebody was stupid enough to point a camera at me and say, hey, go at it. That was last January. So I was on every single day last year. Every single day. I missed 6 days. 6. Okay? 1, I was sick as a dog. 2, I had to take someone to the emergency room. I missed 3 days because of the hurricane. No water, no electricity, no cable, no internet. For a week. So, yeah. I'm here every single night doing this exact same thing over and over and over again. And I actually share all my trades over and over and over again. I have 7 accounts. I share 3 of them with anybody who wants to take a look. Okay, right down here. Here's all 3. 1, 2, 3. Now, I don't share the other 4 with you guys, but I do share 3. I got to cut the limit off somewhere. I'm a nice guy to a certain point. Other than that, no thank you. So, Mr. Dan has an interesting question. You look broke as fuck, and no one is subscribing to a broke guy giving money advice. Dan, thank you very much. I just love it when people tell me how I should spend my time and my money. And you don't need to subscribe if you don't want to, Dan. More power to you. Okay. What's the YouTube channel? The 10-Minute Trader. Okay, The 10-Minute Trader. Okay, don't. Windows 95 had NetBIOS exploit, and that's why it was updated. It was flawed. Okay, I get it. People want to progress. People want to do shit. Okay. I had a 1927 Oakland. It had one wire from the key switch. Didn't even have a key. Just had a switch. Just turn the switch on. One wire from the battery to the ignition to the coil. That's it. One vacuum line, one wire. You touch that button, hit it, it started right up. Just because it's old doesn't mean it needs to be replaced. And yeah, I understand things get old, but Windows 95 worked perfectly for me. Estee Lauder, Josiah, I love Estee Lauder. I do. Give me an affordable Dividend stock. Macy's, Ford, Nordstrom's, Kohl's, Walgreens, Eli Lilly. Ooh, we'll have to take a look at that tomorrow. OPP, never heard of it. What stock was before this one? Don't remember. We have too many of them. ENB, Enbridge, no dividends, no thank you. AGNC, the premiums are actually horrible. I don't like it because if you're wrong, you're really wrong. Okay. Is this pre-taped? Melissa, I'm asking you, do you think it's pre-taped? Now, the reason you're probably asking that question is because we're at 12 o'clock. I usually quit at 11:30, but there are so many questions still here, I can't get to all of them. And I always answer every single question. Okay, so I'm going to be here a little bit longer and keep going through the questions. Flying Turtle, 3.64. I have no idea what that means. Flying Turtle, 1. Oh, wait a second. 3.64, that is the return on SCHD, and 1.73, that is the return for VIG. Yeah, I don't like either one of them. PZZA, I have no idea who that is. RGTI, no. RGTI, no, the numbers just don't work. Ford, I like it. I'm not dead yet. Cool. Flying Turtle. Looks like a record. Really? It's not a record. Check out Papa John's. Not 20 years old, dude. GME, GameStop, not 20 years of dividends either. I was snowed out of my house after walking home during lunch. Class of 82, John. Yep, that's me. All right. Dakota. Homie, what's your vice? Women. That's what it is. Class of 82, think forward. What's the next big play? There's no, okay, what I do, there is no such thing as a big play. It's 1% per week. Same stocks over and over and over again. Ford, Macy's, General Motors, Nordstrom's, Kohl's, Walgreens, Bank of America, Capital One Finance, ConocoPhillips, Walgreens, Walmart, blah, blah, blah. Just subscribed on a Pantheon. How soon before we get access to the Discord? There's no link. Oh, I send out the lists first thing in the morning. You'll get, if you joined, you'll get a link to the Zoom call first thing tomorrow morning. El Pablo, have up the trigger trade. That ain't happening, dude. Pengu and Toshi. Okay. Good night, all. John K., have a good night. Chasing Jack James. Oh, that's the last one. Oh, wait a minute. We done? So basically, you risk nothing. No, not necessarily so. Okay, so I bought a company like USD. I bought it at 41. The thing's down to 31, 33 now. Okay, I bought it at 41. It's at 33. Harley Davidson, I got it at 35. Now it's at 29, 28, something like that. Yeah, there's risk. Always risk. Good night, all. Okay, James, Chasing James, where can we take a pic? Yeah, you can't. What's the cost of your course on Saturday? Okay, James, more, it's going to be an invite only. I haven't got all the details on it yet, so I will let you know. So if you're here tomorrow night, the night after, check my bio. It will probably be updated into that once I find out more information. That's the last of the questions. Questions all done. Woohoo! I'm done. You guys have a great night. We'll see you again tomorrow, because the sun will come out tomorrow, wipe away the cobwebs and the sorrow, till there's none. Just thinking about tomorrow.